Good morning. All right, let's get the coffee going here. Morning, everyone.
They started to come back later in this year. Of course, tech made the leaders list sector-wide, and then consumer discretionary, unsurprisingly, because people went more for experiences this year as well.
Yeah, it was pretty interesting. Some of the ones we chose to single out there as the winners list because it's a good reminder that even though it was super tech dominated, some of the other key themes really played a big role, including housing as well, which just was unstoppable again. A few, sector-specific and stock-specific winners in the mix, but generally, the downside was just companies that misfired, with the exception of being that solar trade, which as a whole just got bludgeoned.
Yeah.
Everything else was kind of stock specific, like the Estee Lauder thing, misfires, falling behind competition. A bit refreshing though that the market.
All right. Hope everyone had a good evening. Watching Home Depot with all of the issues with the climate and the weather. Let's see. This is NVDA, pre-market NVIDIA. All right. ARM Holdings is up $1.80. NVIDIA was up 7 and change last I looked, $6.65. Meta's up $2.40. Amazon's up $1.50. Broadcom's up $14.68. Apple's up $1.25. Tesla's up $4 and change. Netflix is up $3.65. Google is up $1.50. Microsoft up $2.25. And Snowflake is up $2.80. All 10 New York FANG index stocks are higher this morning. Morning, everyone. CarMax looking for a follow through. CarMax looking for a follow through today. That's some good news. It's up pre market. I won't chase it pre market. That was brought to you yesterday from David Buford. Thank you. On CarMax. All right, futures are off their highs. This morning we were up near 47, looks like 95, 47.95. Let's see what it was actually. 47.95, yeah, 47.94. 94.87 was the high, 94.87. 47.94 and change. All right, so that looks good. All right, let me get TradingView up and running. Thinkorswim is running. Okay. Woody is up. We got 7 minutes to go for the opening bell. 7 minutes to go.
Who gave you the real recession chart? Where does it start there?
Yeah, so that's been a term that we've been using for quite some time to describe this new cycle because we had the initial burst in growth during the stimulus era, very concentrated on the good side of the economy because, of course, services were shut down.
Okay. Forgot to update Gamma this morning. So go ahead and do that.
goodness, goods versus services separation with greater strength in services plus offsetting that weakness. There's been another dichotomy sort of picked up here where you see two of the components that had recession level declines were consumer confidence and CEO confidence. If you take hard activity proxies for both of those soft
All right. We got 5 minutes to go. Let me just update Gamma real quick. Keep an eye on the FANG stocks. New York FANG is going to pop today. Pretty interesting. We were talking about yesterday how the October run up was a 10-day run. On day 10, we pulled back, but the following day we resumed the trend. That's a look. It looks like we're doing exactly the same thing. 9 days up, day 10 pause, day 11 resume the trend. Okay, a little fade on the morning high at the moment. Okay. Looking for a follow through. What's up, man? Okay, we got 3 minutes to go for the opening bell. 3 minutes. All right, I'm updating Gamma as we speak, so you might want to check that out prior to the open. Your phone's over there, dude. All right, 2 minutes to go. 2 minutes to go. Leave that till after. Till after. NVDA trying to push a bit higher. NVDA. Watch NVIDIA here. NVIDIA is starting to move. It's already up $7 and change. Okay, starting to tick up. Futures starting to catch a bid. All right, about to open. Okay, we are open. All right, so CarMax is up $8 and change. Tops views looking good.
High took alert plus 800. Extreme high took alert.
All right, give the markets a few minutes to settle down. People will be taking profits off the table. Okay, let's go take a look at the NASDAQ 100 real quick. NASDAQ 100 being led by Micron. Micron, the top of the list. Micron's number one on the Qs. Micron. Okay, Micron looks good. Let's turn that off. Okay, nice gap up on the markets. Micron, big gap up. Don't chase it. Wait for your best entry. You'll have people taking profits off the table. You don't want to get caught in the middle of that. Could fade quite a bit. Microsoft on the move. Microsoft looks good. Okay, Meta. Meta's going. Meta. Meta's up $6, 1%. Let's see, Meta, ATR. Meta's 86% of its ATR, 43% of its daily range. Okay. Meta. Okay, let's see, Meta. Nice pop on Meta. Okay, continuation. Meta has an ATR of a little over $8. It's currently up 6 and change. So let it fade a little bit. Let it fade a little bit. Okay, all the FANG stocks look good. They're all green. Just don't chase. You should be fine. Nice reversal from yesterday's drubbing. We still got a ways to go on SPY to get back to yesterday's high, right around 476. Okay, so SPY has a ways to go. Shorts covering, inside day for now. This could go either way, all right? So RSI, if we do make higher highs and RSI doesn't push back above 70, it's currently right at 70, we could have some divergence. So you might have a couple more days of upside. Probably. All right, looks good. All right.
SchwabNetwork.com, all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services.
Okay, giving the markets a few minutes to settle down before you make a decision to go long or short or to do nothing. Always a good idea. Meta is still flagging.
Extreme high took alert.
All right, more shorts covering. Okay, so we're stalling right here. Inside day on the SPY. NYSE. Wow, nice. 17 to 1. Up volume. It's fading from 17 to 1. It's currently 15 to 1. Stock's fading now. Micron, a little dip. Micron, Raymond James, Citigroup, KeyBank, Goldman, Stifel, JP Morgan, Needham, all upgrading their price targets. Barclays, Mizuho, Morgan Stanley. Everyone's upgrading Micron. It gapped up. I wouldn't chase it. Just wait for a little dip for an entry. Okay, we're starting to fade already. Okay, so be forewarned. Don't chase. A little profit taking. And the market's a little profit taking. All right, keep an eye on Meta. Meta looking for the follow through. Okay, let's look at Meta. Meta. Meta with a nice pop. Been on a buy signal. On a buy signal. Volume at the open looking good on Meta. Amazon bouncing. Microsoft looking good as well. Looking for Microsoft to follow through on this bounce. Apple. That dip yesterday, giving people an opportunity that were not interested in chasing. SPY still moving here. 13 to 1 up volume. $13 to 1 up volume. All right, it's the Bulls to lose here. The Bears, actually, it's the Bears to lose. Bulls, I don't know. Not a lot of blocks, folks. So just keep an eye on volume. Not doing that much. It's 13-1 up volume, but that's a lot of that's probably shorts covering too. Now let's see if we follow through or we fade more. NVDA was up 750 and change. All right, so China is going to halt export a range of rare earth technologies. It's not the first time it's done that. The country's done that. Micron still looks like a little bit more profit taking. Micron, if you're thinking about a long on Micron, don't forget implied volatility will collapse most likely. Be unusual for it to just keep going. Let's see Micron. Let's see what IB is doing. You don't want to be caught trying to swim upstream like a salmon. Let's see. I can't see IV here. Oh, there it is. Okay, IV is starting to pull back. Okay, so as IV is pulling back, the premium, if you were to do nothing, the premium is starting to compress. So you'll see the value of your option, especially call options, starting to move lower, even though we are higher. Okay, that'll happen throughout the day and into tomorrow. So no need to chase Micron. Let implied volatility come back a bit more. And maybe we'll have an entry on Micron. Micron, a dozen upgrades, price targets anywhere from 140 to 100, 105. Let's see, 140 is the highest. Okay, so that's almost a double on Micron. So that'll take weeks and months. So no hurry to jump into Micron, but it looks good. Yeah, I reduced on N-phase as well yesterday. On that pullback, I reduced a lot. Okay. N-phase is still jockeying around right now. Energy stocks, looking for energy. Energy's off a little bit right now. You might want to take a look at the transports, maritime shipping, because they have to take new routes, at least for the next few weeks, next few months. They've been talking about that all morning. Some of these companies will charge more for that additional trip around Africa instead of going through the Red Sea in that area. I got a feeling I wouldn't want to be a Houthi right now. Not Houthi and the Blowfish, Houthi, a Houthi rebel, because you know that something's going to happen. Too many countries have too much interest in shipping through that area. Why can't we just all get along? All right, so Meta, a little bit more fade, looking for a flat VWAP and choppy price action for now. Till we decide what we're going to do next. Microsoft at VWAP as well. All right, let's keep an eye on the FANG stocks. All right, the New York, the NASDAQ 100 index, we're being led by Micron. Centos. All right, Centos, very interesting company. All right, they have over 1 million clients worldwide. This is viewed as an economically sensitive indicator, meaning if companies are buying, renting more corporate uniforms, more corporate identity products that this company produces, you're going to see the stock continue this trend. Well, this tells me that economically, maybe we're at the high. Maybe this week we reverse and we close below the 10 EMA. I don't think it's likely, but this tells you, paints a nice picture. Okay, Centos. Okay, Centos looks good. You know, all these little things that you learn over the years that you learn in this trading room, very valuable to know. Something as simple as Centos, understanding what strength here means. Yeah, I'm looking to get back into Enphase too, Aaron. It's just turned the corner. Enphase and the solar stocks got upgraded. What is this? Last week, right? Thursday, Friday. All right, this is breaking a downtrend. So while it's off a little bit, the pullback is actually what you want. Okay, so you want to pull back for if you've no entry, no position yet in phase. Pull back yesterday, inside day, Harami pattern. Okay, so NASDAQ 100, the Qs. All right, Dexcom is on the move. Okay, inside day, but Dexcom looking better. Sector-wise, we have all sectors green. Every single sector is green. That's beautiful. Okay. Dexcom looking good. Big move on Dexcom. Finally got an upgrade. What was it, Monday or Tuesday? Looking for this to follow through. Okay, Meta, what you doing, Meta? Meta, a little bit of a dip there this morning. Microsoft chopping around VWAP. Can't believe it's the end of the year coming up. Wow. Meta looking for a nice bounce.
Available anytime, anywhere, on any device for free. Swap Network.
NVIDIA looking for a bounce.
Let's talk tech and the winner of the year. Scott, the NVIDIA, you're looking for
Okay, SPY still inside of yesterday's waterfall event. That was mostly caused by zero-day options, by the way, if you were in the trading room late in the evening. Brent over at Spot Gamma alerted us to the fact that that was mostly caused by zero-day options. Okay, NVIDIA on this dip looks like it's going to start to go now. NVIDIA. All right, I might put a credit spread back on NVIDIA. Let's see. Let me look at NVIDIA. Okay, 460. What does a 460 look like on NVIDIA? NVIDIA vertical put for 460 is a 2 delta. Let's go out to January 5th. 18 delta. 460. Okay, I'm probably going to take another credit spread on NVIDIA. Okay, I took another credit spread on NVIDIA. Oh 01, 05, 460, 460 is 20 something points, 28 points lower, and it is a 18 delta. Oh 05, 450.
So there seems to be the logic of a whole tech trade that can ride that wave, kind of fly, with NVIDIA side by side and its tailwind. But there's also going to be companies that look at it sector competitively that are going to have trouble keeping up.
All right, if it continues higher, NVIDIA, if it continues higher, I'll probably take a vertical as well. $460, $450. Could still fade. Okay, so NVIDIA is still sitting here. Could still fade a little bit. Let's see the FANG stocks. I'm not going to do much at the moment. Remember, I'm reducing risk, not increasing. So while I'm selling credit spreads, I want to make sure my delta is way down and still have some implied volatility to deal with. Okay. Tesla hanging out. Microsoft looking for a higher high. Right now it's producing a higher low. It did gap up. All the FANG stocks were higher this morning. They're still all green. All right, let's take a look at the New York FANG index real quick. That'll give us a broad brush look at this group. Okay. So over here, the end of October, that vertical line, we had 9 days up. We faded on day 10. Another 9 days up. We faded for 9 days. Yesterday, we ran up 9 days straight. On day 10, we faded. So over here on the 9th day, 10th day fade. The next day, day 11, we took off to the upside. Is that going to happen again today? I don't know. It feels very stretched, but if it does, we'll see it in price action. Meta's still fading here. Meta's still fading. Okay, we're still fading. Meta's still fading. Let me take a look at Meta on the daily. Meta. All right, a little fade. 2 candles, 3 candles here. We see wicks at the highs on Meta. Okay, we're at the upper Bollinger Band, so we could come in a bit. Let's see what NVIDIA looks like. NVIDIA. Okay, NVIDIA could come down to 375. The 460's recent lows. Okay, looking for a bounce. NVDA, nothing yet. All right, so we got a flat VWAP on most of these stocks. Looking for price to hug VWAP and chop around for now. Expectation is to chop around. All right, Meta's starting to bounce. Meta. All right, we're starting to rally a little bit higher low. People took profits, it looks like. Some traders taking profits. Now we're starting to catch a bid. Looking for a higher low to print. Okay, Meta, nice little bounce. Okay, we'll continue to fade. Still fading. Market's still fading. Okay, NVIDIA. All right, so we still have an inside day in NVIDIA. Inside day on Microsoft. Apple, inside day. Amazon, you guessed it, inside day. Google, so right now no one's winning. Bears have it on the gap down, but I mean the gap up, we're fading at the moment. Bulls need to step up. Our VIX is at 1377. That's interesting. A little bounce there in the VIX. Volatility picking up, so your options are going to be more valuable if you're selling. All right, watching. All right, we're still fading. S&P fading some more. All right, Tesla, Snowflake, Bitcoin. Enphase still an inside day on Enphase. Biotech's fading a bit more. NVDA, okay. I would wait. I'm waiting. Meta's still fading. 3 wicks up high, actually 4 wicks up high each day. We've had sellers at the high of the day. Actually 5 days. 5 days in a row, we've had sellers at the high of the day instead of the reverse where we have buyers at the low of the day. For the past 5 days on Meta, as it hit the highs, we've sold a bit. Look at Meta. Let's look at Meta. Okay, so you can see each one of these candles, with the exception of this hanging man candle, each day we pushed higher and sold, pushed higher, sold. We stayed in the upper half of the daily range, so that's okay. But today we're doing a similar, we look kind of similar at the moment. 5 days in a row, pop to the highs and then fade. 204, we're in the upper half of the daily range. Yesterday, we're in the lower half of the daily range with the selling we saw. NVIDIA is still fading. NVIDIA. Okay, so let's look at some other names. Shipping, FedEx. Big gap down on FedEx earnings. Okay, buying the dip. Let's zoom out a little bit. Let's go to the weekly. Just looking at opportunities. Ooh. Coming off the highs of the year for FedEx. We have support levels at 225-ish, 232, right in this zone, most likely. FedEx, if you're thinking long term, I wouldn't buy it per se at the moment. I'd wait for a base, but you can see right in this area, there's a lot going on. Okay, let's just do that. Okay, so this whole zone, several levels. Let me just lighten that up a little bit. Okay. Okay, we got this low right along in here. Let's also do a Fibonacci. Reason Fibonacci's work is because so many people use them. All right, so you can see this previous low right here would be a 382 Fibonacci from the October reversal. Okay. That's pretty interesting, right? Yep. Okay, we'll pull that over here. Okay. And we'll put another support right in there so we can see that. Okay, that looks good. That's a FedEx weekly chart. Okay, so FedEx, I wouldn't do much with it right now. It could bounce. I'd wait for a base. Watching the FANG stocks, which were all higher this morning. They're all still green. Okay, Apple fading back to flat almost. Broadcom is up 12 bucks. Let's look at semiconductors. Semiconductors, inside day. AVGO, Broadcom. Okay, basing at the highs, still very risky. This could pull back, so I would wait. FedEx still fading. What's ARM Holdings doing? ARM's hanging out at 70. It's up $1.70. It's off the best levels of the session. ARM Holdings. ARM Holdings. Okay, continue to make new levels. Okay, that's your high there. 69. Okay, good support level. Just like to see more volume on ARM Holdings. You got this volume by price. Obviously, we're trading in an area where it hasn't traded before, so there's anyone who's selling up here is just selling from wherever they bought at the highs, taking some profits off, most likely. Looking for SPY to bounce. Amazon starting to bounce. All right, so that's ARM. Amazon. Amazon looks pretty good. Amazon. Upstart. Inside day. Upstart. Building the right side of its pattern. It could see 73 again. All right, so about 25, 30 points more. There goes Amazon starting to move. All right, all the FANG stocks starting to see a bid. Shorts covering. All right, we got a little bid right there, shorts covering. Let's see if this follows through or if it's just a little fake out. Okay, Amazon looks really good. Amazon, what do I want to do with Amazon? Amazon. I don't want to put on a whole lot of new risk. Remember, we were taking profits off into strength. A little three candle business going on here, but you have the bullish candle on Monday. Okay, that came on decent volume. Friday was above average volume. Okay, so that looks good. Amazon looks pretty good. Meta's starting to bounce. Amazon. So you got your lows in on many of these. Okay, Meta. Let's go back to Meta. Meta. Okay, starting to bounce. Amazon. Buyers at the low of the day for Amazon. Okay, VWAP up and to the right. Let's see if that continues. We got to get the indices to move. The indices aren't doing much right now. The indices still below VWAP. Okay. Okay, I got to take a 2-minute break. I'll be right back.
preserving that almost tech staple-like quality. What people kind of debated whether or not it was true. It turned out to be true for Apple. It really did. And some of the factors, there were, of course, factors we could point to that led to some of this, let's call it disappointing revenue growth in terms of what we saw from Apple. A lot of it due to the way the strategy was executed. That's seen as one of the primary kind of potential risk factors going into 2024 if you are to see a bounce back from Apple. But also being in this transitionary phase, going from maybe a hardware first, and maybe continuing being a hardware first company, as we get into that services and software space more and more, higher margin business, a way to monetize device consumers after they've already bought the device has been a key focus under Tim Cook and the leadership at Apple. So as you look ahead, of course, other emerging markets like India have been a key focus for Apple, and they have had successes thus far. So we'll see if those do continue. Okay, nice look at speaking of what kept this stock going despite a lack of top line expansion. Thank you, Sarah. Here's the next joint. Let's talk about it. Trade with Joe TJ for Bill Manager, the National Equity Harvard Fund. What do you think, Joe? Did 2023 finally confirm the notion of a big tech safety jolt?
Yeah, it did fantastic this year. You know, Warren Buffett famously does not buy tech stocks, and maybe we saw something in Apple that's no longer a tech stock; it's just a utility. People use these phones forever, and now it's become the largest phone in his portfolio. So yes, I think it's become a staple. It's become just moved into this mega cap world where it's just one of the largest companies. One of the things that people need, they love the ecosystem. People just have to have the next, newest, latest, greatest Apple phones. They just enmesh with their products and are just kind of tied to it.
Now, we'll see what happens next year with the watches. That's going to affect the ecosystem. Not exactly ending on the best note, I have to say, but still, the stock as a whole.
Yeah, leave it to Apple to return a negative into a positive.
Right.
They put on word, hey, these watches are coming off of the shelf, and people ran as quickly as they could to buy them while they could. So you never know. Nobody really knows what's going to happen in the holiday season shopping. People say that they know what's going to happen for Christmas. They're lying because we have to wait to see what the numbers pan out after the fact.
Okay. What do you think in terms of trading now going into next year? Options have subsided in volatility a bit, so I imagine it's probably a decent time if you wanted to own the premium, or what do you think?
Yeah, I think you're right, especially in the short term. Premium in the January months looks relatively cheap to me. We go out later in the year, though, that premium looks a lot more expensive. And it's kind of like a tricky spot. You know, I love Apple. You know, I love the NASDAQ in general. But right now, it's just a little bit tricky given where we are with this tremendous run up in the past 2 months. 6 week rally, just non-stop buying action. We saw a little bit of hiccup yesterday. Maybe it's time to take some cards off the table. It doesn't seem time like for me. If I'm entering a new position here, it's not time for me to run and up and buy stocks maybe 12-month highs. If I have positions, you're looking at protecting them with some calls and some covered calls here. So for me, entering a new position here in Apple for 2024, I actually look at the June downside. So if you look at the 190 put, I can collect $7.80 to put that on. You know, effectively buying Apple at 182. That seems pretty attractive given that Apple is now 195 for me. So I don't want to come up here and run up and pay these prices right now. If it does come back to me, I'd be happy to buy it at 190. If it does not come back to me, hey, I get to collect 780 here, which is not too shabby. Maybe a 4.5%, 5% premium, just to wait on the sideline here in Apple.
All right, looking a little better.
So yes, it is higher, but it's still relatively cheap for these run. You look at the S&P 500, you look at the actually looking at an 18-flight ball for June. So there's a big difference between what ball is what I'm thinking now. So for me, the gamma, I want only one ball to be the short ones. I want to collect previously the back ones here for 2024. The ball to be much higher. That's how I'm looking to start the year. Yeah, happy New Year to you too.
Everything comes closer on trading currency. That is right here at the New York Stock Exchange. Trading 360. Only on download the slot report. Join in on the latest market trend. Available anytime, anywhere, on your device for free. Slot accelerate your market knowledge. Shift your perspective.
All right, nice little pop. All right, here goes the markets again. ARM Holdings, ARM making new highs here. ARM is up 286. Carnival, yep. Upstart, was that Toyota Motors, TM? TM, what is that? TM, Toyota Motors. TM on the move. Toyota's on the move. Let's take a look at the daily chart on Toyota Motors. Okay, they're sitting right on top of the 100 period moving average, Toyota. Okay, not quite there yet for me. I'd like to see another bullish day. Toyota looked pretty good though. NVDA holding inside day. Looking for a push, looking for more conviction buyers. Path, that one had some energy a couple of weeks ago. Path is still consolidating. Boeing seeing about 100,000 in 5 trades. That's at the highs. Okay. AFRM. Just going through a list that I'm looking at here. AFRM. Inside day. Got a lot of inside days. What about DraftKings going into the holidays and Super Bowl, etc.? Rounding top. Okay, S&P looks good though. Let's get back to the business at hand. S&P. Okay, that looks good. Pushing higher, back above VWAP. Now, it's very possible we could just chop around VWAP. So we need to see conviction buying pushes back up into yesterday's range. If you don't recall, yesterday was a waterfall event caused mostly by zero-day options, which was very interesting. There wasn't any news per se. And yet we had this waterfall into the close. And after the close, we saw some more volume. Gap up, and now we can move back up. That'd be interesting. Let's look at the New York FANG. I don't feel the conviction yet, even though we are bouncing. Okay. We got to take out yesterday's high. I don't see that happening. The S&P 500, we know that 4,800 is a major level. We got very close yesterday. We're an inside day today. The 921.50, 200 all pointing up and to the right. So now it's just a matter of, okay, maybe we're just consolidating the recent gains because we've run up since the end of October. So with that in mind, I'm taking less risk, not putting more risk on. And my coffee should be ready. Let me go grab my coffee. I'll be right back. Okay, coffee's good. All right, so what I'm seeing so far, folks, is inside day everywhere. Okay, here's the S&P 500, inside day. Let me just update this. Inside day. Okay, so we have flat BWAP everywhere, basically. Microsoft flat, Google flat BWAP, Netflix, Meta, Amazon starting to fade, Broadcom. All right, so everything I'm looking at has a flat VWAP. So unless something happens in the next few hours and VWAP starts to tilt up and volume comes in, I'm expecting that we're just going to see this. Remember, coming into this week, I was telling you that we were expecting volume to taper off into the holiday weekend. It's Thursday now, so should start to see this quite a bit. Very few block trades. We've got 1, 2, 3, 4, 5, 6, 7 on the IWM, 5 on the SPY, and 2 on the Qs. Okay, so that needs to pick up. That needs to pick up. So 2, 5, and 7. 2 on the Qs, 5 on SPY and 7 on IWM. So IWM, after the dip yesterday, maybe we have a better opportunity there. Let's go take a look at IWM. Okay, inside day. All right, so everywhere, inside day. So obviously, no one has an edge right now. You might think you have an edge. Maybe you do. Maybe I don't see what you're doing, but IWM, Qs, inside day. NYSE had 13 to 1. It was 17 to 1 at one point. Now it's down to 8 to 1, 8.6. Actually, that looks pretty good. It's not an inside, well, it's an inside day, but much bigger candle, more stocks. Everything is overbought, though. I don't know. The risk is that we could fade more, or people could get disappointed and start selling because the markets aren't moving because we have flat VWAP everywhere. Let's look at the Dow. Dow's 30 stocks, inside day. Okay, so I'd be careful unless we see something happen. Everything is showing inside day. Okay, inside day on the New York FANG. We're in the lower half of today's range so far, close to it. Okay, ARM Holdings, watching ARM. Some individual stocks will probably slip through the radar, so to speak. Micron. All right, Doji, spending top. CarMax, fading from the high. Centos, spending top. Vans, VFC, narrow range, up 85 cents, but making higher highs and higher lows. Not jumping out and saying buy, buy, buy. What is that, Backstreet Boys? Boys to Men, what is that? Buy, buy, buy. Okay, Carnival Cruise Lines. This is a 6-day up here between 18 and 19. Not feeling it so far. In phase, little move lower in a trend that's working. So some of you are already back into in phase. I like the idea too. Energy stocks have already pulled back quite a bit and only have started to move higher over the last since November. But if you look at the weekly time frame, energy stocks pull back a lot. So the odds are, even though we could pull back a little bit, the trend is going to continue higher for longer. Okay, let's look at energy. Same idea. Energy sideways. It's in the middle of its range for now. Looking for energy to push higher. It's been below the 50-day moving average for 2 months, 3 months. Looking for a follow through. Nothing yet. Okay. Let's go look at a few other things. Let's go look at the sectors. We're looking for signals. Okay. Bullish or bearish signals. We're at the highs. Okay. Does this show any signs of peaking yet? No. Does this show any signs of peaking like over here when the bear market started, when it reversed very quickly? Doesn't look anything like that right now. This is the consumer discretionary versus consumer staples. So far, this looks good. Institutions aren't positioning very defensively. Let's go take a look at skew. Okay. Very important you go through this workflow. See what the odds are. All right. So you can see skew was way up here at 162 and then dropped very decisively just as quickly as it ran up. All right. So what's this telling me? All right. Mostly institutions aren't that heavily hedged yet still. VIX, red signal, so that's saying caution. till it turns green. VIX VXV. 1 month versus a 3 month got close to red and turned back up. So that's mostly neutral. S&P 500 probably saw these dip quite a bit. 50-day, 200-day. A little bit, but it's back up today. Okay. So we're hanging out at the highs. I'm seeing mostly neutral. And a reason to stick with the plan. The plan for me was to reduce risk coming into this week, not to add risk. Yeah, she was buying. Kathy was buying. What was she buying? Cameron, you're crazy. You're crazy, man. All right. All right, Amazon, somebody bought $109 million worth of the 165 February call. Amazon, 1 million. Did I say 100? 1 million. Amazon still sitting here. All right, I don't feel the edge at the moment. Inside day everywhere I see. Mostly flat VWAP. Flat VWAP, no momentum. Mhm. Okay, let's go look at. All right, so we were looking at the equal weight. We left off with the equal weight. Let's go see what value. Remember, both of these were well away from their 21 EMA. All right, so growth, SMH, tech, software, cloud, etc. Inside day, 21 EMA still pointing up and to the right. Same with value, inside day. Okay. Materials, energy, financials, industrials, etc. Consumer staples is in there too. Healthcare. It's a neutral signal. What else can I tell you? Let's see. Let's go take a look at advanced decline. Number of stocks making new highs versus new lows. Note the McClellan volume oscillator. This is turning lower because there's less volume selling at the high, less volume buying and selling. When we get down here at the low, that's capitulation selling. That usually turns into a bounce. So it's kind of flipped on its head. So when it's everybody's selling like crazy, you get capitulation. You get down in the green zone, that's usually where you start to look for a buy. Same thing with the equal weight index and the number of stocks above the 50-day. When it gets down into the washout zone, that's when you want to start buying. Up here, you want to be reducing your risk. We've been telling you that for the last couple of weeks. For the most part, taking risk off makes a lot of sense. You're still making money if you got trades on. You're just doing it with less money, making less profits, but you have less risk as well. Let's look at the advanced decline, new highs, new lows. We're still above the zero line, but we're starting to make shorter bars and they're red. Okay, so we got 41% more on the sell side. Advanced decline, more advancers than decliners. So this is kind of neutralizing itself. Let's go look at the bullish percent. This is the number of stocks on a point and figure buy signal. All right, we're just flagging. That's neutral. Let's look at put call ratio. Neutral, right at the moving average. On the total put call ratio, CPC. We're right in the middle of the Bollinger Bands. That's neutral inside day. All right, so if we get anything going, it's going to take maybe a couple hours to push VWAP, tilt VWAP up and to the right. So you need to see price action like we had here at around 10.15. That needs to continue a higher low. So we're still waiting. All right, CF Industries. So CF, let's see what CF looks like. CF Industries. All right, so that's got a bid in it, CF Industries. Let's go take a look at CF. Okay, what I was looking at here is CF. Okay, you got a bid in CF. Look at the volume coming in. You've got people buying the May 2024, May 85, 87.50. Okay, so that's CF Industries. And this is what it looks like on the daily. This looks pretty good. Okay, fertilizers look good. Freeport McMoran holding Rio Tinto. Looking at these materials and agriculture stocks. Okay, so CF Industries looks pretty good. We got $7 million in trades on CF. CF Industries. Somebody likes CF to the point of $7.75 million trade on this one. Let's see what the IV looks like. CF Industries. Maybe in the money. Maybe in the money. All right, that's going in the money. CF Industries. I'm looking at a call vertical on CF Industries, perhaps. Fertilizers. CF Industries. All right, that looks good. Where's the, all right, pivot high is 83. What if you sell, what if you buy the in the money? In the money, let's go out to, when did they have May. Let's go out to May. May. And let's look at buying in the money. 77.50, selling the 83. 82.50 is the closest. Oh, that's not bad. Not really. 85. All right, it's pretty even. So vertical. I'll pass on that one. Probably just shares on CF Industries. I would probably buy shares and sell covered calls, maybe the 80 or 81. IV is pretty high. Maybe let's see what the vertical looks like. Credit. Okay, sell the 77. May. No, I don't want to go out that far. May 77.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash benefit solutions, all designed for investors like you, with no monthly service fees or account limits. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe.
CF Industries looking for a follow through.
Is linked to your Schwab One brokerage account. You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is all in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Fedelides, live from the New York Stock Exchange. Catch me on Schwab Network, anytime, anywhere, on any device, for free. Schwab Network.
Download the Schwab Network app and join us to follow Schwab Network is available anytime, anywhere, any device for free.
Or Dexcom, what are you doing, Dexcom? Dexcom, go, Dexcom.
Trending names every day. It's Fast Market. Ready for you, ready to go. Untitled
Arm holdings,
Fast Market.
looking good, arm. Coca-Cola, defensive stocks, looking good. Okay, still showing signs of no follow through. More selling. We're up at the highs. I don't know. What do you guys think? What are you thinking? Because look at where we are and where we've come from. I mean, seriously, you think that's just going to keep going without somebody taking some profits off the table going into the holidays? I mean, they made their gains into the month of November. Okay, so they got rid of all of their chitty bang bang stocks, and into the month of November they started buying. Look at the volume during November, last week of October into November. Okay, and you got this one big selling bar that was on OPEX. Yeah, selling yesterday. I don't know. I just don't see us getting much higher. 4,800 is pretty formidable. If we were to move higher, that would be an opportunity to take more off into strength. Capiche? I would not be putting on a whole lot of risk up here, folks. I'm just not interested in taking a lot of risk. I mean, we've run higher for what? 1, 5, 6, 7, 8. Week number 9. Number 9. Week number 9. The weekly also. And you got this peak over here as well, off to the left. I'm looking at pivot. I don't know. It looks like a big double top to me, right? What do you guys think? Seriously, 48.18 was the 2021 high before we had the bear market. Or we just going to, some people have been talking about a big range. Okay, so here's the middle of the range. Okay, somewhere around in there. October low, let's give you a Fibonacci to look at. All right, so here's the low. There's the high. Okay, 236. 236 would be back down near 4,500. I don't know, it's hard to tell. I don't have a crystal ball, but we're looking at a double top. Now, if for some reason we broke above the 48.18 level, and that 5,000 level is building. Let me just move this out of the way. Okay, that's better. All right, let's just bring this up to 50% is right there. And 382 is right there. Okay. And let me tone this down a bit. Looking at the volume though, for the last 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th week. For the last 9 weeks, nothing but volume. MACD is turning. As we start to ease up towards 4,800, opportunity to de-risk. The head of trading over there at, was it JP Morgan or Morgan Stanley? I forget. He's sort of a Polish last name. I forget the guy's name. Saying that he would like to be mostly in cash into January. More cash. I don't know. To me, it's a sound strategy, right? So we've had this nice run up since October of last year. We had our little pullback, pushed higher. We're at double top. If we break out, then we know we're breaking out. If we get rejected, then we know we're getting rejected. Expect some retracement. I just can't see taking on a hell of a lot of risk here. IRA, 401k. As far as long only funds, let's see. Weekly, December 2023. Okay. Let's go take a look at TRBCX. I did reduce my exposure in TRBCX, so I've missed some of this upside. I'm still participating, but with less cash on the table, or less invested in this. So We are looking for, you can see that the S&P is almost at 4,800, that 2021, late 2021 high. TRBCX has a ways to go. All right, so we got another 20% to go. 150 to 170. We got into this late last year and have done very well with this one. So I don't know. I just can't see putting on a lot of risk. Okay, so we're right around here now. We're 147. All right, we're back here now. We pull back. Okay, so we got about another 15% to go. RSI is still above 50 on this weekly time frame. I can only tell you what I'm doing. Personally, I'm not a FINRA advisor, but what I'm doing is reducing exposure, selling credit spreads, taking fewer verticals. The verticals that I take, call verticals, I want to make sure I'm in the money and that there's a sector that is starting to see some flow, like CF Industries, for example. This one's been on a downtrend since October. It's only like a week and a half into this turn. What's HD Home Depot doing? Home Depot, okay, flagging at the highs, Home Depot. So with all the flooding and everything that's been going on, there's going to be, a lot of business for Home Depot. Will it move higher? Let's look at the weekly. SPY's still showing signs of potential fade. Home Depot could get up to these highs over here near 400. Okay, 399 was the high. MACD's turned up. Rate of change is accelerating. I would look for a flag now. I just see there's more risk that we could fade for and consolidate for a few more days. I'm not thinking that we're going to crash or pull back demonstrably, but certainly consolidation makes sense after 8-9 weeks up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates.
ARM Holdings trying to make a higher high now. Yesterday's high was just a little bit above us now. We're right around 73 and change yesterday on ARM Holdings. Okay, did they shake out all the dead wood and weak hands? We hear that comment all the time. I don't think it's really weak hands at this point after a 9-week run. Along with some of those weak hands, people like myself, like you guys in the trading room and ladies, have been taking profits off into strength, hopefully de-risking. We'll get an opportunity. What does an opportunity look like at this point? What does an opportunity look like? Okay, so S&P went sideways for a couple of weeks. End of November, went sideways, and then we took off to the upside. All right, so we had a leg higher. So look at it this way. Okay, so this is a good way to look at it. Actually, you know what? Let me just turn on zigzag a little bit darker. Let's go to 1. I'm going to turn candlesticks off. Okay, so this is another way to look at it. Okay. Okay, so you had this nice leg up. I'm looking at the zigzag lines here. Okay, nice leg up, zigzag, consolidate. Nice wave up. What do you think's happening right now? I think it's consolidation. Now, while I don't have a crystal ball, what would happen is if we consolidate for another week or two and we take off to the upside above 4,800, then 5,000 would be the target I'd be looking for. That's where a lot of these big firms, Oppenheimer and Goldman Sachs, JP Morgan, they're all looking at 5,000. I think Oppenheimer's looking at 5,200 for the first quarter. I don't think they're looking at for that by year end. Anyway, so if we consolidated this week and next week and then take off, we would know what to do. At this point, we don't know because we're consolidating, if that makes any sense. All the indicators are overbought. They're not down here at the low. Would you see that pivot on that zigzag? You see where stochastics and MACD are? How they turned? RSI turned from oversold? We're not there. We're at the opposite end. So the odds are that we could consolidate. At worst case, we consolidate. Or even worse, we pull back. Russell was talking about 4,500, I think you said. I don't know. So you can see it's very indecisive right now. You know, we have to see price action give us the thumbs up or the thumbs down or the safe signal. Safe at second base. Right now, we're on first base looking to get the second and around third. What's he talking about, baseball? Right now, you don't have a good risk reward. Okay. Consolidating inside day. Remember this over here? Remember July? Remember when I was telling you there was a shot across the bow? You remember that? Some of you do. I'm sure, Corey, you remember. We saw this shot across the bow. I forget what the reason was. That was a Thursday. But it only took a few more days. We had an inside day, a couple of days of not going anywhere, and then we started fading back below the 9 and 21 day. Do we look like that right now? Look at the 9 and 21 day. All right, still up and to the right. So we're not there yet, but that could very well be tomorrow if we don't go anywhere today. So what's your risk reward? You're neutral, hoping for the best, planning for the worst, okay? So if we did something like that, you know, that turned into a 3-month downtrend. You can see how right now, unless they show some conviction and start pushing this above 47.78, which is very possible, it's equally possible we could drop below yesterday's low. Anything below 4,700, we would definitely be risk off, okay? So just keep that in mind. Below 4,700, we'd be risk off. Exactly. Good point. Yeah, that's a good point, Easy. Good points. Yeah, I like that. Yeah, good. Cool. Yeah, Baidu was the top of the NASDAQ 100, by the way. Baidu. It is currently number six on the NASDAQ 100, Baidu. I have a hard time trading these Chinese stocks. You know, if you get a good trade, all right, so it's good risk reward. 110 would be your stop. Okay, 125 would be my target. 125 to 130, that zone overhead. Yeah, I like it. Yeah, I like it. Looks good. Baidu. Mara, Mara working. Okay, Bitcoin. The only thing I have on Bitcoin is BITO. For those of you trading Mara with Mondo, congratulations. Okay. Mara, nice move. All right. Look at that volume. Mondo killed it.
Well, it was beat on EPS and revenue. It's still losing money on a quarterly basis. EPS came in at 95 cents. That was better than they expected, just over $1 loss. So that's a benefit there. I think it's a key
Mhm.
AI memory chip that's going to tie into NVIDIA's newly planned Resistance chip in early 2024. So that's a bonus. CEO is pretty positive on the commentary, saying that generative AI would drive a multi-year growth phase in the company, leading to record for the memory industry, which they lead. They said also that inventory levels for memory and storage across the PC and mobile markets. Now, remembering mid to late 2022, the forecast this year was issued. They seem to have remedied those. And then also on the flip side, some of the wafer makers that make the wafer components for the memory chips, they pulled back production pretty significantly. So what we've seen over the last quarter is the ability for high flash and other memory chip makers to actually raise prices on DRAM and AMD, which is included the profit margins at this point. So yeah, it seems like a pretty good report on the top and bottom line. Also, the focus on the bar is really high.
All right. Uh, all right. So Moderna, who was it that was talking Moderna yesterday? Who was it talking Moderna? About to go. Was that you, Joel? I think Joel, that was you, right? Moderna, mRNA, turning the corner. Okay, that looks like it's starting to grind. Okay, so in the money calls maybe or shares, maybe you do a buy right. Oh, was it? Okay, thank you. Thank you, John.
That's driven, if you look at the history, 11 out of 12 recessions since World War II were precipitated by a crash in housing. The exception proved the rule because the tech bubble closed in a very mild recession. So that's kind of 90% of
John Smith, kind of like John Wick, right?
we have this partially pandemic related shortage of housing, about 3 million homes. So that is one potential risk to our call. But as you're pointing out, we have above expectations.
DMs, Frano. DMs.
Keep in mind, recessions 900,000, great financial crisis 500. So that's positive, and also this rate rally supports the housing market as well. So we're bullish.
Okay, Moderna looking good. A grind. Moderna looks good for a buy right. Shares maybe. You got to stop underneath your 9 EMA. It's not moved, hasn't moved that much. It's up $4. It's got an ATR of 450. So you'd be buying at the high of the day, literally. I hate that word, literally, and classic. That's a classic bull candle. Whatever. Certain little things bug me like that. Got nothing else to bug you. All right, Illumina also looks good. ILMA, ILMN also. ILMN. Look at ILMN. Illumina. Nucleus Genomics wants to make personalized healthcare a reality. All right, so this is a good example.
So let's talk about your outlook for stocks in particular for next year. This rally that we've been experiencing, some of the callers trying to call the average but we expect this rally to continue.
Some people are shy.
Absolutely. Our view is that we avoided recession, so we're now in a bullish, a immersion from what could have been a recession.
Yeah, right.
There's only, again, back to the history, the Fed caused every single recession. There's never been a
Mhm.
and there's only
Look, it hasn't moved that much, so you're aware of it. Okay. So
recession.
hasn't moved that much.
So we're looking at this as early cycle. So we actually see more upside risk to our target just like this year than downside. Partly because rates could be lower, but also we have the AI boom, and a lot of times booms like they did in that 2000 boom, they get over exuberant, which is efficient, ironically, for what happened
And it's number 4.
in the sector.
So here we go.
We think there's
Moderna,
risk to the upside.
Illumina. These look good. All right. So the NASDAQ 100 is still mostly green. Okay. Okay. We only have 12 stocks.
We do think they're going to outperform, and in fact, not just small caps, but all financials and interest rate sensitive securities. And if you look at the value index, we think that's a better way to play small caps because those are mostly profitable companies and they're in less risky sectors like financials, retail. And
Uh,
we continue to
you guys are a trip.
just like they have over the last
All
month.
right.
They got completely smashed during this increase.
All right. These look good.
Fears about a recession.
Baidu,
I think it's
number 7 now.
exposed to these
Dexcom running up the list. Dexcom was somebody upgraded. Piper Sandler upgraded Dexcom on Monday or Tuesday. I think it was Monday. Okay, Dexcom. Dexcom is up $5 and change. Dexcom.
way overdone.
Okay.
Little did we realize how right we were.
So, all right, that's another way of looking at the markets, right? I was showing you before all these inside day patterns, but yet we have 88 stocks out of 100 green on the NASDAQ, the Qs. So maybe we're just seeing rotation at the highs. We can consolidate on rotation as well. All right, Moderna. Okay, let's go take a look at those top 25 stocks on the IBB. Uh-oh, what happened there? IBB. Okay, here are the top 25 stocks on the IBB. The NASDAQ Biotech. Guardant Health. It's up 7%. GH. High or low. Building the right side of a cup. Guardant Health. All right, so that looks okay. Moderna. Natera up 4.5%. Come on. Natera. All right, that looks really good. That's the top. You see the handle right there? Look at Natera, NTRA.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a meter. Another guy was charging $2,500. Didn't want to do that. Proud of the price. My dad instilled in me.
Looks pretty good.
Be proud of offering a good product at a fair price. I think he'd be extremely proud of us.
Above 63 would be a breakout on Natera NTRA. That looks good. Dexcom. Okay, Micron's the top of the list. Still fading a bit. It's still up 5.8%. Centos. Okay, that looks good. All right, we got some put sellers here on the S&P. $4,600, $4,450. Put sellers at 1114. Below the bid. And that's BB. All right, what time is it? It is 11:17. Day's going kind of slow. Going kind of slow. All right, so we're looking at biotechs here. Illumina, 10-time genomics, 10x genomics, 10x genomics. All right, all of these are building right side. All of these are building the right side of the cup. Okay, bullish pattern. One of the biggest or one of the most well-known bullish patterns, cup and handle. All these, look at the volume too. All right, we're still fading here on the SPY. So we could be seeing rotation, folks. All right, let's go take a look at rotation real quick. Rotation, rotation, rotation. Okay, let's take a look at that. Go to the daily. Let's look at the S&P 500 sectors. Survey says, okay, into today, look at the sectors in the far left, light blue, improving. Materials, utilities, materials, utilities, consumer staples, real estate, industrials. Look at consumer discretionary turning quickly. Look at energy, how this is like that long tail down into the lagging sector. So we're looking for that to follow through. Energy still has promise. Now, tech and financials are still leading. So let's look at the hourly now. That's the weekly. That was the weekly. Sorry. Let's look at the daily. Okay, that looks a little different. Okay. Consumer discretionary materials still look good. Okay, so that's after yesterday's selling. Let's look at the 60-minute now. 60-minute. Okay, 60-minute. Healthcare, real estate, utilities, communications fading, energy fading. All right, so we got a bunch of neutral signals here, which equates to those dojis we've been looking at. So if not dojis, where are stocks moving that don't have dojis? Well, we have an inside day on IBB, but if you look at Moderna and these stocks I just posted in the trading room, all of them are following through. So these are not inside day. These are actually the area that you want to focus on. It looks like Illumina. Okay, TXG. Okay, all of these are bullish. You see that? Okay, TXG is an inside day, but Looking for a follow through. All right. What about REGN, Regeneron? Okay, fading. What about Novavax? We haven't talked Novavax since 2020. That's still fading, Novavax. Okay, so Moderna, those are the obvious in play stocks in this group. I'd like to see more volume. That's the only thing. All right, Centos looks good. Okay, looking good.
50. This one's still in a bearish trend here right now. You can see, I mean, this chart is pretty well defined. Migration value has been continues to be for the downside.
Right. Well, absolutely. So hang on, Kenny. Hang on, buddy. We will come back
If
to
you
you.
look at that chart, like you added all the way back to 20, where you at starting 2021. So 21 and 22 went way towards zero. You saw how it was really, right? It was very tight in that range. And then the whole 2023 trade started working. I don't know whether it's 85 or 75 or even 65, but at 25, after it's had that breakdown, and it is starting to, what looks to be, build a base there and lift its head. And if we get that ongoing rate cut through, I think this, as it's saying, that this makes some sense. But I appreciate that analysis. But that's just my perspective if you're looking to make a trade. I think this one has more upside, even if it's not a long term call, but if it's a
Okay, Centos looks good. All right, so bueno. Micron's still the top of the list. Starting to find a bid. Micron, number one.
I'm not buying the energy weakness story. I am absolutely not buying demand is going to slow down. I'm not buying it. I just don't think it's true. Now, the U.S. is also producing at rates we haven't seen since the Trump administration, which is good on the number front. A, because we can export that. B, it's also a national security issue, right? For us. You guys are trading it on the dividend, but it does have that. And it seems to be here over the face. I think earlier now finds its base between 65 and 75 in there. I think 2024 is going to see demand increase, and I think we're going to see oil prices trend higher, and then I think that's one over along with some of the others in the group will do that.
All right, let's see if it carries over that way. And let's party and get through to the technicals really quickly before we go. Dan, I gotta get to you in a minute.
Sentiment here. So I guess we're going to end on a high note, Penny, today as we head into the end of the year. Exxon also, for the most part, ending on a high note. Let's take a look first and foremost. 15-minute candle chart. You can see the move lower just after the last couple of weeks. We're down around 97, all the way back above 100 and 104. Yeah, we've been kind of sideways, sort of choppy, as Kenny mentioned. Not a lot of conviction recent.
Okay, Moderna's starting to go. Looking good. 11:30 on the East Coast. Moderna looking good. Moderna. When does Moderna report earnings? Let me just check that real quick. Wouldn't mind doing a credit spread on Moderna. MRNA. Earnings are scheduled for February. All right, so January, not a bad time. Let's see. Ooh. What is that? 80 put. Let's see what that looks like. 80 put is what? That is a 17 delta. Okay. All right. 75. Let's go to a 81. That's a 19 delta. Moderna. What about in the money? Paying up for volatility. January. Just looking at some potential trades. Buy the in the money 90 and sell what? The 105 as previous. It's $500, $400. All right, Moderna, looking for that to continue. Moderna. Lucid, Moderna, Dexcom. You okay? You working anymore on? You know what? Number one son just paid a visit to the office. Okay. Okay, so Bitcoin just sideways. NVIDIA hanging on to VWAP, flat VWAP. Meta just sideways. Slight downslope to VWAP. Meta. Tesla above VWAP. Can Tesla get going? That would be nice. Tesla. All right, let me take a look at Tesla on the daily. Tesla dipped yesterday, shook a lot of people out. I took it off because I didn't want to take the risk that the puts would go in the money. So collected less credit, gave some money back. Tesla is on the 9 EMA, but nothing says, let's jump on Tesla just yet. We do have buyers at the low of the day. So if we start to move towards 260, that would be great. I'd like to see more volume on the S&P. I need a new floor mat for my chair. Okay. All right, a lot of stocks just sitting here inside day, going nowhere. Microsoft flat. Moderna, Illumina both turning the corner. Moderna.
Here we are sitting on 25% gains in U.S. equities. Our U.S. core bond index is up over 5% this year. And if you think about all that we've overcome, the debate on Microsoft landing, inflation raging, we had the biggest bank failure since 2008. We've had all kinds of geopolitical risks. So I think investors have a lot to be grateful for this year. I think the lesson is, always risks.
Okay.
think one thing to summarize from that is, hey, listen, I'm buying this year, right? And we also saw growth stocks make a comeback this year despite high rates. Now, what do you think happened there?
Yeah, so the growth stocks, of course, led the market down last year. Our growth index was down substantially more than our value index last year. And the narrative was that higher interest rates, rising interest rates, were hurting growth stocks harder as they were devaluing their long-dated cash flows. We've seen growth stocks thrive this year despite rising rates. So I think we have to be skeptical. Sometimes these rules of thumb.
Okay, just remember where we are as far as how much risk you put on. If you're going to take 10 calls or 1,000 shares, maybe you take half. I'm talking about myself. I'm not going to take more risk. I'm going to take less risk if I think something's going to move, like Moderna. All right, here goes the S&P starting to move now into the noon hour. So we've sat here since the open, right where we are right now. Haven't moved much. And as you would expect, inside day, a doji means that you should see a flat VWAP. With a flat VWAP, no momentum. So in order to get more bullish or more bearish, we need to see momentum start to shift. We need to see VWAP up and to the right if you're bullish, or down and to the right if you're bearish. Right now, the odds are we're going to just sit here and do nothing. People that are buying right now, they're anticipating that prices will move higher. I'm just thinking the most we're going to get out of this is maybe 472.44. The 200 period EMA is right near at the moment. The 10 EMA is the red dotted line. VWAP is right there. So when all of these get close together, we're looking for a move. Okay, that's an Oliver Velez strategy. VELEZ, Oliver Velez. Check him out on YouTube. He's got a lot of good videos. Let's see. Let's see what Bollinger Bands look like. Okay, so this is telling you something as well. Okay, remember we were talking about consolidation? What are Bollinger Bands telling you right now? They're telling you look for consolidation. Why? Because you see how we got narrow and then Bollinger Bands opened up. Now they're turning back towards price. So that upper band is probably going to turn in. If it doesn't, then we could see a grind higher. But if the upper band starts to turn inward, that's telling you look for price to stay in this area between 470, 460, 750, maybe in this range, about a $5 range here, 50 points on the futures to stay right in this area. Just like over here, when Bollinger Bands turned inward in the bottom here on the 3rd week of November, 4th week of November, what happened? Prices went sideways. Upper band turned in, consolidation. So we didn't go anywhere for a couple of weeks. That's what it's saying right now. Bollinger Bands, volatility starting to come in. Tesla starting to move here. Tesla. Okay, Tesla starting to move. Upstart, Boeing. All right, Halliburton seeing some flow. Halliburton. Okay. Carnival. All right, nice breakout on Carnival. I think acceleration, you took Carnival. Nice pop. Carnival, nice move. Tesla looks like it's going to turn. Tesla, let's see. Remember, Tesla needs to take out the high that we put in this week up here near 260. That's a major level. Above 260, the call wall will shift upward, most likely. Okay, so Tesla 260 is still the upper call wall, and we got 455 is the one below that. So we got to get through 255. Okay. 255 and 260. Once we get through that, then the calls will most likely be shifting upward. The Bang stock's looking a little better now. Still consolidating. No reason to do anything irrational at the moment. Amazon looked good. Now it's flat with VWAP as well. Meta's still flat, up $1.85, but most of these inside day candles are not giving us much to go on. Tesla looking like it might start going. All right, Tesla, but it's got to get above 255. Ow. Don't claw me, cat.
Binge watch the market with the Swabnet. Tune in 24 hours a day, 7 days a week at swabnetwork.com and on all your favorite streaming services. Swabnetwork, available anytime.
What? I know your mother needs to feed you, huh? I just sent her a text. Okay? Cat wants to get fed. I don't blame her. All right, so Tesla. Okay, Tesla needs to get above 255. Your mom's going to feed you. She's hungry. All right, NVIDIA starting to turn. NVIDIA turning. NVIDIA turning. NVIDIA's turned here. Watch NVIDIA. Got a bid in NVIDIA. All right, NVIDIA turning. All right, there goes NVIDIA. All right, NVIDIA starting to chug along. Tesla needs to get about 255. It's just at 254 right now. Your mom's going to feed you, okay? I know you're hungry. You know, I was thinking last night how fortunate we are. You know, you look at what's going on in the world around us, whether it's the climate or war or whatever, tornadoes, crazy, I forget how you pronounce it, Derricos. It's just this weather's just been nuts. Just be thankful for what you have. You know, if you have your family around you. So many people have it worse off. Anyway, has nothing to do with trading. Sorry, I get sidetracked sometimes. Human being that we are. NVIDIA. Okay, NVIDIA starting to get a bid. It is still an inside day. Still an inside day, but starting to see a bid. Starting to move above VWAP. This is how it starts. Okay, price action starts to lift, and then VWAP turns and moves in the direction of price action. That's what we're looking for. Meta still below VWAP. The gap down here. Snowflake turning. Microsoft starting to turn. Microsoft turning. Okay. Okay. CYTK. I saw a lot of option volume this morning too, Frano. CYTK. Are you that hungry? What's wrong? You're so cute. I love you. You're so cute.
Yeah, so obviously the stock has made a nice run, but if you look at the chart using a 10-period moving average, it's just steadily trending above that, and we can certainly assume that it's trending higher to continue going forward. So we can play a bullish trade here. This is a continuation, very simple, going out to February with about 50
Looking good. CYTK, nice one, Frano. Okay, Tesla needs to get above 255. Tesla trending now. All right, looks like it's going to go. Tesla. Tesla looks like it wants to go. Tesla.
I remember when I first started flying, and we experienced turbulence, I would watch the flight attendants. They're not nervous, but I'm not nervous. Financially, I'm a flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
14 Delta.
Names every day. It's fast market. Ready for you, ready to go. I'm Kevin Higgins. Catch me on fast market.
All right, looking at Tesla for maybe a credit spread. Let's see, what is implied vol? 227. Implied vol is 48%, and theta is 15 cents. I'm looking at the January 5th credit spread, selling the 227 perhaps. Let's see, that's a 14 delta. Buy the 225 perhaps. Let's see, buy the 225. 225.
Missed out on today's market headlines? Get caught up and catch the rest at SwabNetwork.com. Available anytime, anywhere, on any device for free. Welcome back to Trading 360. I'm reading on your critical penalties, and the job market has been a real bright spot in 2023. So what's ahead for the labor environment in 2024? Let's bring in our former podcast. We've got Richard Sharma, who's the founder and investment manager at Altus User, and Richard Walters, CEO of the American Staffing Association. Thank you both for joining us here.
Thank you.
Of course. Let's start with you, Richard. Now, what was the biggest takeaway from this morning's jobless claims print? And then talk to us a little bit about the state of the market right now for labor.
So I think that this is a good indicator that the economy is actually normalizing. It's very consistent with some of the news that we saw come out of the recent meeting of the Fed. And we're coming off of that exuberant hiring cycle we saw in 2021, 2022. also good news. Labor markets remain tight. Employers are holding on to employees, and we think we're in a pretty good spot.
Okay, let's look at that. Tesla. All right, Tesla's sitting here. Tesla. Markets still haven't followed through, so there is still a possibility of a pullback. Tesla. All right, just going through some possible trades here. 230. All right, Moderna working out pretty well. Moderna. Okay, looking good for Moderna. Moderna starting to break out of a squeeze on the 60-minute. MRNA.
So those historic rate hikes that we saw from the Fed throughout 2022 2023 are beginning really to be felt by especially small and medium-sized businesses, but they're affecting all aspects of our economy. As a result,
Tesla.
we're seeing some interesting signs of redeployment of talent inside of a workplace, and it really kind of melts very nicely with the trend that we know is going to be with us for the rest of our lifetime. That's upskilling and reskilling and retraining. As we look at the job market in the first half of the year, but there are some signs that as long as the Fed doesn't increase rates, we begin to see a decrease in rates, say at the end of the second quarter, beginning of the third quarter. We think that bodes well for hiring and bodes well for what everybody's looking for, which is a strong
Okay, Moderna coming out of a squeeze. Let's take a look at Moderna real quick. I'm sorry, I was stuck on this. mRNA coming out of a 60-minute squeeze.
So wage growth has actually begun to moderate as employment markets have loosened. There are exceptions to that.
Okay, you can see Moderna here coming out of the squeeze. Which direction is RSI pointing? It's pointing higher. So we're looking for a breakout above 95 on Moderna. Okay, looks good. All right, I would take it easy with risk. All right, only do your best setups, take your best setups, and, you know, temper the bullish expectations because the markets are still not moving. All right, SPY looks like it's going to test the lows of this gap. All right, starting to fade a bit more. Moderna. Okay, still pushing. Okay, we're about to go into all right, so still no follow through on the indices. So temper your expectations. All right, Moderna looking good. All right, so markets are just not giving you much to go on. Just know that we've had a nice run up and we more than likely will consolidate at these highs before testing 4,800 at this rate, the way it looks.
Low tick alert minus 800.
Okay, pulling back in now. Moderna. All right, a little bit of profit taking at the highs. People get some early momentum traders probably getting nervous. Looking for Moderna to continue this pattern. S&P fading into the gap now. VIX spiking out to 14. That's the highest it's been in quite a while. VIX spiking up. Inside day on XBI, IBB. In phase looking a little better. In phase. What are we going to do in phase?
Be careful of this. If the majority of the people think one thing, that's what you can bet is probably not going to happen. Right? I mean, this year, other than the fourth quarter, they couldn't have been more wrong. They said a bumpy first half of the year and strong second half of the year. Well, the first 9 months, it couldn't be one more opposite of what they said. Now, that said, the market loves to jump ahead. 3 cuts projected by the Fed turns into 6 projected by the market. So the biggest risk in this market going forward is reigniting inflation. How do we know that? Well, five to 4 and 5.5%. But remember, there's still massive amounts of government spending unused yet and unspent. That's going to come into the system next year. So any significant decrease in restricted rates is going to unleash spending.
All right, in phase, just grinding along. In phase. Okay.
Stalls out at the level that we're at right now. We see inflation come down to 2023, which is what the Fed wants. You can see that last mile.
Not a lot of volume on the selling. We got 4-1 up volume leading, 2-1 on the NASDAQ, 4-1 on the NYSE. Okay. All right. So Meta's still fading. Meta. All right. Meta. Meta.
Low tick alert -800.
Okay. Still more selling into the gap this morning. S&P into the gap. All right. We're fading a bit more. Okay. So inside day fading from the gap. That's why the candle is black. We were up. Now we're moving lower. If we take out yesterday's low below 4,700, it's a big level too, by the way. We take out 470, 4,700. That would be an area where I would say, okay, take a lot more off, risk off below 4,700. That would mean we're probably heading back towards a 21 day. All right, so we've had 3 legs up. 1, consolidate into the second week of November. 2, run up, consolidate into December. 3, the most recent run up, now we're consolidating again. A little bit of selling volume yesterday, above average. Okay. Above Monday and Tuesday. Wednesday, we had this big selling bar. Today's volume won't show up until the end of the day, just the way stock charts does it. Stochastics, MACD, everything is overbought, so to speak. So you can see clearly back here in October, RSI was oversold, price was at low. MACD turned from the lows, stochastics turn from the lows. We're the exact opposite right now. So the odds are against you if you're still bullish. Volume picked up after these all turned higher. Okay. Last time MACD and stochastics were embedded back here in the last week of November, what did we do? We didn't fall off. We just went sideways. So that's a possibility too. We just go sideways above 4,700. If a loss of 47 would be very important at that point. Okay. All right, I'm going to rest my throat for a minute.
Windows licensing and Microsoft 365 and Microsoft Word and productivity, all those other products that feed off new PC sales, right? Then, so we do that for this time next year. We know what's happening this year. What's next year?
That's a really good point. And I feel like towards the end of 2023, all we talked about was we hit the bottom and which finally the sort of declining PC and lack of demand for these PCs. While other companies with massive PC exposure also hoping I can feel the same thing. So I do agree that while any PC recovery will be a huge thing and perhaps the bottom is already behind us, hopefully, I guess in Microsoft's case, I do still think in terms of what the street
All right, we're still fading. S&P is still fading.
Yeah, and I think those partnerships that they have with Oracle, OpenAI, Salesforce, also really matter as far as, and that goes. But then also you look at enterprise spend on 2024. Are companies going to start to really ramp up their enterprise spend because that was supposed to pull back pretty significantly in 2023, and it didn't happen as much as we thought it was going to. All right, great stuff. Great back drop here. Microsoft in its year that it was, and what you look forward to in 2024. Correspondent, but now let's bring in Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, I wanted to get your take here just on the equity moves that we've seen so far this year. As I mentioned to Kevin at the start of the show, we pushed back against everything that was supposed to happen, and you saw, the NASDAQ 100, the Dow Industrials hit all-time highs in 2023.
Yeah, absolutely. And, I mentioned that to Oliver, maybe sometimes you got to zig when the market zags. When you look at some of the swings that we've seen this year, and yeah, how wrong the bond market has been, the analysts have been, the Fed has been, and, we've lost, 120 basis points in the 10-year here over the last, 6-7 weeks or so. Have we gone too far? And so, one of those risks as we, roll over the calendar to 2024 would be a reset of the Fed expectations or how many cuts they do, or a reset of, you guys mentioned it, the inflation expectations. The consumer looks pretty strong looking at the recent data points, and I think the easing of the financial conditions along with the stock market near all-time highs, housing prices hanging in there, that just probably is going to embolden the consumer and maintain that demand, which is tied to inflation. Now, I also say more tactically here, we are aware that we're in December, rolling over into January, so keep in mind that those underperforming names might have a lift due to tax law settling or due to window dressing, and then when we roll the calendar into next year, some of the winners could be subject to some capital gains realization. So when you look at the bottom performing sectors for 2023, we've got utilities, staples, healthcare.
Okay, so
Maybe take a look at some of those things for potential rotation trade. You don't blindly just buy them, but maybe do some research there because there might be those sectors, if rates continue to go down, that has a lot to do with utilities and a number of those sectors that are underperforming. Maybe you might see a shift of sentiment within some of those sectors.
Okay, baby.
Point, the fact that the 10-year yield fallen so much from the 5% levels that we saw at the end of October, 120 basis points through the end of December here to the downside heading. To make the point, that's going to help maybe some other sectors that maybe those higher rates were hurting at that time. But if you look at the rates falling,
Okay, so just keep in mind we're probably going to consolidate unless something happens to change our mind. Looks like a consolidation of the current uptrend over the last 2 trading days. Tesla just flat. All right, still more fade. VIX still climbing.
You just took my word. I was going to use it. There are landmines out there, Nathan. After 11 meetings where they hiked rates from 50 to 75 basis points, expectations next year is coming back. The market's priced in 5 to 6 cuts of 25 basis points next year. If that happens, you see a scenario where it's okay, soft landing. Now we're going to cut, or do you look at what the Fed's projecting? 3 cuts of 25 basis points, which would help us navigate that soft landing.
Most stocks are showing doji patterns. S&P is showing a doji. Okay, so it just means that no one's really winning. We are fading at the moment, but Tesla, for example, is sitting on top of the 9 EMA. NVDA, inside day, spinning top. It's in the upper half of its range. Okay, what time? 12:15. Let's shift gears and listen to Bloomberg instead. Or it's CNBC.
Your property here. So not yet, okay, but it's an appropriate question. It's a topic of discussion, let me say that. For the most part, these stocks, and there's a bunch of others that are in the same boat, I think they have a lot more room to run. However, whenever you put a group of stocks together, I don't care if it's the Mega 7 or these stocks, there's always going to be one that you're looking at and you're thinking, maybe I should be doing something. So this may surprise you, Judge. It may surprise our viewers. I'm not trimming it, but Boeing's at the top of the list of things to trim. It's a topic of discussion that I had with Stephanie, who's also a shareholder, as you know, just a couple of days ago, and a commercial break. And the reason for this is really quite simple. It was down in the doldrums for so long, and Scott and viewers, you'll remember I added to it a lot. So this stock, by virtue of being up kind of 50% over the last year, has become rather enormous in my portfolio. I think there's plenty of room to run here, and I'm not trimming today. My point is that it's a topic of discussion.
And see, Josh, as I pivot to you, I'd love your comment about Uber, because I think, if I remember correctly, you trimmed maybe 10% of your position in the last few weeks. Am I right? Are you the one who did that?
Yeah.
I did it as it hit its high, and not because I wanted to own less Uber. It's just the biggest winner I've ever been in. Really, like it's a huge position, and it went up so much, and it went up a lot more than a lot of other stocks that I'm invested in. So that's my sell discipline. I do that when I have a really big outsized winner, just so like my whole life doesn't get wrapped up in how it does. But that's what every, I think, prudent investor would do. It's not necessarily a judgment on whether or not there's still upside, because I might have trimmed 10%, but what that means is I held 90, and I have no intention of being out of Uber. Right. So my personal opinion is, like, if you think of all the publicly traded companies that could become like the next mega tech platform company, a la Magnificent Seven, Uber's on that list. Doesn't mean it's going to happen, but it has that potential. They are the killer app for all things mobility. Whether you want to ship liquor or food or people, anything you want to move physically from point A to point B, right? They're probably going to be the default choice to do that, and that real estate that they occupy on our phones and in our minds is unreplaceable. Uber is a verb in our in our lives, and I think that's what I really like about it.
What about Carlisle? So your list includes Carlisle up 48, Samsara 44, Shake Shack 29, Matterport 27, Empire State Realty 22. Again, just since November 1st.
All right, a bear flag forming on the S&P.
Talk to us about your thought process here.
Well, a lot of those names you just mentioned are among my worst investments and stocks that I probably shouldn't even be in anymore. So they will be dealt with. I did not need tax losses per se from these positions, but if I did, boy, I'll tell you, I don't think that I handled the drawdowns in some of those names the way that I should have in the last couple of years. And I don't even want to get into the fundamentals of those companies, because there's really not much exciting with the share.
Yeah. There's the list. I appreciate the conversation, guys. I think it's helpful because let's face it, we know that some viewers follow you guys in to names that you mentioned repeatedly on this program. They're probably wondering some of the very same things that I've asked you, whether they should trim some of their big winners or not. I hope your answers have helped them. Chips have been a huge winner too. The SMH is pacing for its best year.
All right, I'm going to take a couple of minutes to make lunch. Be right back.
SMH is outperforming the S&P. That leads us to our chart of the day. Thank you for the animation there, because it's Micron, which is up near 7%. Christina Partsinevelos is on the set with us at Post 9. Tell us what's going on here on the back of earnings.
Guidance is that gross margins improved, which is what the street wanted. But I want our audience to know that all of that has to do with the selling price climbing higher. And this is really a volumes game. Volume is low for a lot of these chips, and that's what's driving the stock forward, not necessarily demand. And I say that because even on the call, and we have a quote for it, management warned that they don't expect volume growth to increase in Q2 or Q3 of next year. Reasons for that is that producers have been cutting back to get through excess supply. But the other major issue is when you switch to a regular memory chip to a more advanced one, it's way more complicated. You take a larger wafer, use a lot more of the equipment, and so that takes much longer to go to market. That increased their CapEx cost, but it also means a little bit less supply. So that played into this role, and it made me think, this is great for fiscal 2024. Why you're seeing so many price hikes across the board? JP Morgan, Wells Fargo, the list continues. We can even show that as well. But what about fiscal 2025? When all of this is riding on AI and AI saving the day for these high bandwidth memory chips?
You own the stock, right? Yeah, it's top 10 name of ours. I love this, David. And this is a classic super cycle in memory here. Now, one thing I really do like, going back to last year, the Micron CEO, when he speaks, people listen. He was talking about it last year, but it's going to be a tough year. It's going to going into this new one. And he hopes that his peers bring down their estimations. They did theirs last year, middle of the year. The stock took it pretty hard. Now it's been able to recover very well out of this. The fact that he's upbeat, I think there's a good tailwind. And speaking of 2025, I mean, their revenue and their net income is going to accelerate. I think 6.6 billion in 2025. This is I like this. I like memory. He talked about last quarter was the trough. I think this stock's going to be. I heard Kramer saying earlier today, $100 stock. If we hold above yesterday's low, that's the line in the sand. I want to own this thing, and that's my stock. Yeah. I think we're right around the highs of the day now, about 7%.
the game for Micron.
Yeah, and it's going to stay like that for quite some time because of this AI play. They even use the Midas touch of NVIDIA, saying that NVIDIA is qualifying them.
When in doubt.
I know.
When in doubt.
Oracle, Adobe,
Mention
everybody
NVIDIA.
just name drops NVIDIA, and then you see the stock climb higher. But they said they're in the final stages of qualifying their high bandwidth memory chips for the H200, a new chip coming out next year, which is a good sign. But even that won't be about 12 to 14 months to come to market.
Yeah, so we mentioned that the space has done well. You don't own this name. I mean, you own others. What do you think here about what's been an incredible move for the chips?
Well, it's been an incredible move, both in the size of the move, but also the breadth of it, right? We're no longer just talking about NVIDIA and Broadcom. And at least in part, that's predicated on the belief that end markets outside of AI are picking up. Internet of Things, PCs, mobile phones, automotive, and all that sort of stuff. Now, I heard, Christina, I just heard you throwing a little bit of maybe healthy cold water on that, saying, hey, it's price, not volume. But you can't raise price, right, unless there's actually end user demand. Or let me rephrase this, and I'm asking you the question, because I'm bullish, both on AI but outside of AI. And at the very least, these markets like mobile and PCs look like they've bottomed. Would you agree?
Oh, 100%. So that is another factor. You're seeing strength. They even said that they see low to mid single digit growth specifically for PCs. The smartphone market's continuing. Data centers, though, you have the CEO say that it still remains elevated and it'll take maybe until mid-fiscal 2024 to come down. So to your point, yes, those two markets are playing a role, but that's a lower selling price than all of this high bandwidth memory. So is that going to be the trend that's going to really propel them forward and justify these $100 price targets?
It may explain why these stocks, such as a Qualcomm or an NXP, are quite a bit cheaper than, say, an NVIDIA, just as an example, or an AMD.
Yeah.
What you just said, yeah.
To that point with NVIDIA, we're going around 2025, 2026 numbers. With the estimates that NVIDIA has out there for 2026, it's a multiple of 22, PE of 22. Now, I mean, you have these hyperscalers like Microsoft and Alphabet, and they're monetizing AI quicker than expected, which is going to be more GPU demand, more demand from NVIDIA and their H200 in the next year. Yeah, it's going to be I'll come off the shelves, flying off. Thank you for being here. That's Christina Pratsanevelos. There is another stock that has surged this year, arguably the most important. No argument that it's the biggest. It's Apple. Here's what we're going to do. We don't have time to do it now. We're going to take a break because Barron's just put Apple on its cover. Whether that's a blessing or a curse, we shall see. They're questioning the soaring stock, whether they have the growth to justify that. We're going to kick that around along with many other names coming up when we come back. We also have a trader triple play, 3 stock headlines on our radar. We'll do that when we come back.
All right.
2018, for example, inflation was non-existent. Here, it looks encouraging. The trends are there, I got to admit. But with the recent easing, that's one of those questions about whether we get a reset there. And the other thing that I would throw out there, we got leading economic indicators this morning.
Just making lunch, guys. I'll be with you shortly.
In a row, you're basically saying it's different this time, even though historically that's been
recession.
We're back. There's Apple. It's only up 50.5% in 2023. And now I want to show you this cover of Barron's that I alluded to. It just dropped. Hitting mailboxes soon, obviously. There it is. Apple needs new growth to justify its soaring stock. It won't be easy. This is the Apple paradox, they say. The company's stock trades near record highs with a market value no other company has ever attained. But its growth is gone. Sales fell 3% in the latest fiscal year. They're forecast to be up less than 4% in the current fiscal year, which ends next September. There's no clear plan for getting it restarted. Josh Brown, take this on first.
Yeah, this is Eric Savitz, a veteran tech investing journalist, and I think he makes a really valid point. The question to me, though, is not will they restart growth. It's how long will the gap be between now and the mixed reality headset, which I do think is going to be a major platform for the hardware platform for them. So how long can they go before those are priced somewhere that normal people would be interested in buying them? And the problem for longs here is that could be a while. So what happens between now and then? Probably not a ton of growth, but a whole lot of free cash flow generation, lots of buyback activity. So you're going to have to hope that people who have bought in at this valuation are tided over. I do recognize a challenge. Now, here's a wild card. If they come out and they do the AI App Store, that's a whole nother narrative. And I don't think a lot of people are ready or even expecting anything like that. But if they decide that they want to own the next generation of apps and the AI ecosystem, if they want to own that to the extent that they own the current the current platform, that's a really interesting conversation that could be very profitable and very exciting for shareholders. So that's the one wild card that I would throw out that I don't think Barron's really spent that much time on.
Bill, up 50.5%. Is that justified? Yeah, I think so. I mean, we're seeing the S&P basically at a record high. Apple is hitting a record high. It's consolidating up there really nicely. Now, yeah, it's not sexy that you're seeing the new revenue growth, but what you're getting is services. Services increased year over year this last quarter by 16%. It's about a quarter of their business now. So it's a bigger piece of the pie. So I think as they grow that, and as Josh alluded to, I think next generation of apps, I mean, you have to have this in your portfolio. Sure, but of course, that's neither here nor there.
Yeah.
Whether people should have it in their portfolio, it's their number one stock. I get that, but that doesn't help me out. Here's what I want you to deal with. The stock's coming off 3 consecutive quarters of negative growth, okay? That's what they're questioning. It's the biggest stock in the market for a reason, because almost everybody owns it, so it's a part of many portfolios. Is a 50.5% gain for a stock that's just gone through 3 consecutive quarters of negative growth justified? And is there a road ahead to justify the multiple that it currently trades at? I'm not suggesting there isn't, but I want to hear from you whether there is or not.
Apple's not an Amazon from a decade ago, of course. I mean, it's a behemoth. It's the largest company in the world right now. But yeah, I think when you see the movement that we had in the market and the flows that came out of the market, so this is less about revenue, I think, these gains this year. The flows that are coming back in, Apple's going to move. It's 100% going to be something that's going to be leader. But again, I don't think their revenue growth, the trajectory of the broad revenue growth, may demand the growth, the gain that it's had this year. But to that point, I think people are focusing on their next generation, the virtual reality, and focusing on the services. And I think that services, I mean, everybody talks about it, but I think that is a real ballast to what's driving the stock.
Forward PE of 30, well above the 10-year historical average. I think we all know that. What's your answer to the question?
Well, there are times that you want to buy Apple and times that you want to hold or sell out. This is not a time to buy for us. It's 26 times 2025 earnings, and those are fairly optimistic looking earnings. So what you've got is a 7.3% weight in the S&P 500. It represents the bottom 150 names in the S&P. Add them all together, it's smaller than Apple, so it matters. Is it a buy here? We don't think so. Is it a great company with great cash flow, huge balance sheet, a dividend? Yes. Are we underweight? Yes. So it's not, it's not priced, we think, at a level that's very attractive. But it's not priced, so we sell.
Yeah, quick, Josh.
On PE ratio, there's a lot of talk about the premium it sells over the S&P 500. I would always argue, well, shouldn't it? Like, it's a 50% premium to the S&P.
It's the degree
Shouldn't
to
it?
which it deserves too.
But
I mean,
wait.
it's not that should it, of course.
But why does it deserve it? Here's the reason: the switching costs out of the Apple ecosystem are completely untenable for its user base. People will not even consider it. Buffett made this point last year. He said it's the only company where if you offered someone, here's $10,000, the catch is you can never buy another Apple product again. Pretty much nobody would take it. That's what. Look at the other companies, Meta, Microsoft. You could switch away from these names. That's why they don't deserve the same premium that Apple gets now. Is that worth unlimited? No.
That's a limit to its
I'm just
growth,
telling you that's where it exists from.
That's a limit to its growth, and I'm not suggesting selling it here, but I am underweight it. And what you just said is absolutely right. But how many people are left to switch from Android to an iPhone? I don't even know an Android user, at least not in the United States. I will say this really quickly, that whenever we pull up a Barron's article like this, I think investors of a certain age, go back to Cisco in 2001, the Barron's article.
It's like the SI jinx.
What's that?
It's like the SI jinx.
Yeah, well, yeah.
Right.
But let's compare the two. Cisco at the time was trading at 120 times earnings. This is, as Carrie said,
It's a bearish cover. It's nothing like that.
Oh, it's a right.
No. Well, the point I was making is that the Cisco cover
It's a bearish cover.
The Cisco was a bearish cover as well, and the stock still hasn't recovered 22 years later to that level. But I do not think that's what Apple's doing right now. By the way, if Apple goes up with the market to my target, it's going to be up 8% next year. This is how that might feel. The market and Apple at any point next year could have a correction. People are going to kvetch and moan, and it's the end of the world. And maybe it goes up 8% at the end of the year, and we're all happy.
All right, I got to bounce. Let's go to Bertha Coombs with the headlines. Hey, Bertha.
Hey, Scott. An update now on mass shooting in Prague. Police just gave a press conference where they updated the number of dead, now saying more than 15 people, including the shooter, were killed. The shooter's father was also found dead earlier today. More than a dozen others were also injured. Police identified the shooter as a student at the university where that mass shooting happened. Harvard University's president is facing another controversy. The school says Claudine Gay is now updating her dissertation after evidence emerged showing 2 more examples of insufficient citation in her work. The accusations come just after a week after the school stepped up to support Gay following outcries over her congressional testimony about preventing anti-Semitism on Harvard's campus. And as winter officially begins today, the CDC director says the U.S. is seeing a sharp rise in flu levels right now, particularly in the South, and COVID cases appear to be climbing nationally. But there is some good news. The RSV virus does not appear to have peaked. Not to mention the fact that there's just a common cold going around, Scott.
A lot of stuff going around. Bertha, thanks. Bertha Coombs. Up next, 3 stock headlines on our radar, including talks of a mega media merger yet again. The headline sending Zoom higher, and the one stock Carrie owns that's flooring it today. All that when we come back.
All right, just making lunch, folks. All right, we're still drifting low. Looks like a bear flag. S&P. Okay, let me shift to the S&P for now. S&P 500 still drifting a bit lower. I'll be with you shortly, just making lunch.
dream.
All right, welcome back. Let's hit some of today's big stock stories, led by that one right there, Warner Brothers Discovery and Paramount, said to be in talks to merge. Jim Leventhal, you've been in Paramount. We've talked on numerous occasions about the thesis here, hoping for a deal, waiting for something.
I hope this isn't it.
Why?
Well, a lot of reasons, but let me just go to the heart of the matter.
Yep.
Debt, okay? And I know a lot of people look at Paramount and say, well, it's heavily indebted. I think you're looking at it wrong when you say that. Has $15 billion of debt on its balance sheet. It's got $2 billion of cash. That's before the sale of Simon & Schuster, which was another $2 billion that they've already used to pay down debt, so there's no debt maturities coming before 2027. They've got positive free cash flow, and the point I'm trying to make here is they've got some runway here to make the deal that works. Pairing up with Warner Brothers, which I struggle to see the synergies there, and I see some cannibalization of subscribers as well, but it pairs you with a company that's got $43 billion of debt against a $28 billion market cap. So I don't see it. Now, I will say this, Scott, and there's a lot of noise going on around this stock right now. Potential Apple distribution partnership, maybe Skydance buys Sherry's Redstone's National Amusement, the change in the pay packages for the executives that makes it seem like there's a deal imminent. I think you got to just sit down and get through the noise and look at the signal, which is that the stock is undervalued at $15 a share. It's half of book value. That book value, mainly the content, is worth more than 50%, which is what the market is saying.
Maybe there's a signal in the move of down 3%. Even as
The synergy is they have to shut down streaming.
You know, Josh, I hear you on that, and I respectfully disagree. Now, this is a debate, right? And David Ellison at Skydance is rumored to want to shut down the streaming. I get you, but a couple of things here. One, Paramount, if you believe the executives, they said on the last call they're past peak losses on it. They're still growing subscribers pretty good. And at around 65, 70 million subscribers, that's valuable to somebody. Sell it. Sell the streaming business.
Jim, they're past peak losses. They're past peak losses because what they're going to do now, which is what every desperate company does when the shareholders start demanding profits, what they're going to do is milk the subscriber base. They're not going to produce as much content, and they're just going to smash you over the head with reruns.
Yeah.
And they'll get by doing that for a while, but you will never, ever grow yourself into profitability by giving the audience less.
I want to move on. I want to get to another stock. It's CarMax. The shares are up today. Earnings beat. You own that.
Yeah, we own it because it's been a tough road for the car industry. You couldn't buy a new car, and therefore people weren't selling them into used car lots. Things are starting to get better. This was not a great quarter because price was down and units were down, but the gross margin per car held up, and the cost to buy the cars for CarMax went down. So we think that we're near bottom for earnings. It was up year over year, but this is a cycle that's starting to improve. The company can earn a lot more than it's earning now, and we think there's a long runway, or the home stretches. We're revving up right now for the home stretch.
Yeah, analysts have been talking a lot about Caterpillar and Deere lately. They are again today with calls. We're going to do that in our calls of the day. Got United Health on our radars today. Got Amgen, CrowdStrike, UNP, Domino's. We'll talk about those next.
What was my ambition when I was starting out? Survival.
I love the word ambition.
Ambition is passion. It's a key ingredient of greatness.
To me, ambition is being undaunted by the impossible.
I'm ambitious for the nation. I'm ambitious for its people. I'm ambitious for my people.
My ambition has always been to seek the truth.
To learn as much as I possibly could.
To make an impact.
I believe in dreaming big. I always have. My ambition is to show gratitude.
Ambition. It's got America written all over it.
Ambition really is the foundation of capitalism.
I wanted to do great things in this country.
My ambition is to do very well in business and to take those profits and recycle back in society to try to make the world a better place.
Everything can be a reality.
I see ambition everywhere. In many ways, ambition, human ambition, is what drives the world.
I'll try.
Said earlier we talk about Zoom, and I want to do that now because Kathy Wood is buying more of that. It's now their 5th largest holding. Josh Brown, you bought it recently.
Yeah. Me and Kathy are going to ride this thing all through 2024. I'm pretty excited to have her aboard. I think the stock is so cheap, it would be very hard for them to disappoint. It's 14 times forward earnings. Almost nobody even realizes how cheap it is. And if they find growth this year, which I think they're going to in the enterprise business marketplace, I think the stock works. So I'm long, and we'll see what happens.
Okay, let's hit some of these calls of the day. I said a lot of talk recently from the analyst community on Caterpillar and Deere. We do have calls today. A negative catalyst watch on CAT from Bernstein. You want to take this first, Bill? You own CAT. Yeah, I mean, we touched a record high. We're trying to get out above there. They raised the price target, and they downgraded the stock. I'm not sure about their angle there, but the way I'm looking at this is that Inflation Reduction Act, I mean, this has been very slow to get out. That money has not hit it. I follow some of these infrastructure companies like a Mastech and a Quanta Services, and they're really highlighting that in their earnings reports. I think Caterpillar is very well positioned to profit off of that. 1/3 of the revenue comes from sort of infrastructure. China was a drag this year too. So I think China turns a corner, and Caterpillar weathered China very, very well. I mean, if we're talking about Deere as well, Deere's been a dud, right? I mean, it's been left behind. Caterpillar's up 15.5% in a month. Deere's up 2.5%. Year to date, it's down 8.5% versus a CAT up 20%. Yeah, I will say I've never timed the Deere very well. It's one of the stocks I can never time. Might be because I'm so close to the agriculture industry.
Illinois.
And he hasn't had good look at it either. And from the futures brokerage side, I deal with a lot of small to medium sized farmers. And look where ag prices were last year. They've been down drastically. They're not getting that inflow of new equipment, new demand, new spending from that demographic. Yeah, we gave you a lot of love at the top of the show. Got a little zinger in there.
Yeah.
What about Deere though?
I think ripped the Band-Aid off at the last earnings call. I mean, that's what they did. They really reset expectations low. I mean, the size of the guidance guide down is such that they have to set themselves a low bar to clear. But to the point you're making, the problem with Deere is you're supposed to buy it when it feels absolutely like the wrong time, when you're talking about crop prices going down and farmers aren't going to buy new equipment and all that sort of stuff. Stock's trading at 13 times. And it's flat over the last year and a half or so. This is actually the time you're supposed to lean in and buy it.
All right, we will take a quick break. We'll come back. Mike Santoli with his midday word next. senior markets commentator Mike Santoli is on the desk. You feel like we're still a little wobbly after what happened yesterday?
Yeah,
Right after
it's a bit apprehensive.
feels
here.
it, right?
Yeah. I mean, obviously not bad to have no direct immediate follow through to the downside today, but volatility markets haven't calmed down at all. And that was a little bit of the foreboding we got ahead of yesterday's air pocket, which was, people betting and were maneuvering for a little bit of turbulence to start the volatility markets. And, we talked about last night, VIX not making new lows, the SP made new highs. So nothing really has disturbed the underlying story, though, right? I mean, the GDP revisions today, right in line with what you'd want to see. It's just more a matter of, I think, people have largely used the fuel of the embrace of a soft landing, and there's not that many more people to convince about it.
I feel like if we look at the market, an hour from now, if it's red, I won't be surprised. It just it has that tenor a bit, the tone to it.
It had been locked into these tracks that was sort of tracing out, extending from an overbought level and adding and adding and adding in a grinding way. And then once you kind of jump off those tracks, then it feels like it's looser. And we'll see if it's just sort of a little bit of a reset in a stretched market to maybe allow the end of year tailwinds to come through.
We'll track it towards the close when I see on closing bells. Mike Santoli, our senior markets commentator. Finals are next.
All right, most stocks still hanging out in doji patterns on the daily. Tesla, example. Inside day doesn't mean much other than neutral bias. Doesn't look like we're going to go either way today. We have the 921 turned up through and moving higher. S&P is continuing to show a little weakness. Okay, so that's what we're anticipating. The S&P getting two highs and consolidating. All right, this is the third leg higher. We had one leg here, moved sideways, moved higher, sideways. You can see what's going on here on the S&P. Okay, so basically, this is what we look like right now. We have a rise, and then we have consolidation. We have a rise, and then consolidation. And right now we have the rise, and we're looking for consolidation. Okay, so that's all we're doing right now. Rise up, sideways, rise up, sideways. This is the third leg up. We're consolidating. So I'm looking for price action to move sideways like this on the S&P 500. Okay. Leg up sideways from October. Leg up into November, sideways into December. Leg up into December. And then now we're just moving sideways. And most of these stocks are showing doji patterns. I'll be with you shortly, just finishing up lunch.
I think that's what a lot of people are looking at, because the Fed looks at that number. But going into 2024, Kevin, you mentioned the landmines that are out there with the valuation stretched at this point. Kind of brings me back to that 2017 into 2018 when we had the Armageddon reaction, when everything was going higher on the optimistic outlook moving forward. Are we in that same scenario, or is the robust jobs market, the consumer still out there spending, going to help navigate that soft line?
Long and variable lags, right? It's a very vague term, and they can be plugged in at any moment. So what has happened to the overall market? When are the lags showing up? Have they started, or have they not even really a wave of higher rates hit the market yet? Remember, they say 9 to 12 months. There's a lot of play on when these interest rate raises hit the market. So I just think there's a lot of reasons not to be as euphoric as the market's out, or the pundits talking about the market. They're all getting their pencils and erasers out and taking that 5,000 S&P and moving it to 51 and 52. Right. They're all moving it higher. Why? Well, because we rallied into the end of the year, so they're moving their benchmarks higher for next year. It's
at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere,
on any device for free.
Schwab Network, empowering every investor and trader
every market day. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investments.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this girl. Schwab.
Have a choice in how you invest with Schwab.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, it is Thursday. We are seeing some strength. Yesterday was truly bizarre because at about 1 p.m. Central Time, we started to see this complete unraveling of the markets on no real news. But today,
coming back with velocity, and it is the most Friday feeling Thursday I can recall.
Yeah, I almost feel unfortunate in the timing of it because yesterday, of course, we did our year-end review show. We weren't talking about yesterday's price action, but we said it from the beginning of the week, and I'll kind of explain because yesterday's a good example of what I was trying to lay out as a possibility. Is markets are quiet right now. They're thin, the volume is light, but if something does happen, be it a news headline, be it just a big sell order, things can move in a hurry. You go to the upside and go to the downside, and yesterday was an example of that. So you throw in there also kind of the kindling of a really, really extended market to the upside. We were kind of due for yesterday. I don't know that yesterday's beginning of something bigger or not. I don't know that if it was simply just something that just happened. It might not even have a reason behind it. Who knows? But it goes to show, you see it today, the market's already given back a lot of this intraday. The markets are thin right now, and the term that I would use is they're whippy. They're moving around quickly.
Yeah, I think that's a really good way to put it. I was on market on close when we started to see the fade, really. It was like we're scrambling to figure out what was happening, why, any type of catalyst. I mean, there's a possibility there isn't one sometimes. I think that yesterday was an example.
Sellers and there were buyers.
Exactly. Just the good old economics there. But most of this show will focus on the individual. There's actually some earnings to get through, although earnings season has, of course, basically come to a close for this year. We will look at our formal discussion, which is one of those earnings leaders. That is Micron, the best performer in the NASDAQ as well as the S&P 500 today. And then under 30 today, we'll talk Lyft, which I do feel like we've highlighted its underperformance compared to names like Uber, but it's actually pacing for its best year on record. Hey, Lyft not getting enough credit from us, I think, Alex.
It's all in the context of its performance, right? I mean, at one point, the stock was almost 90th share, so even with its strong news, it was 15th. So it's certainly gone the wrong direction over time. But we'll talk a little bit more about that towards the end. It has, of course, doubled off the top, so we got to give it credit where it's due there, making a bit of a recovery. But up or down, though, not endorsements, not recommendations. A lot of company names that begin with the letter C here today. That'll be our, connecting factor, but a whole wide variety of different types of companies. So it'll be kind of fun here. We're going to close out 2023. We're going to look at a wide variety of different names in this segment. So is Cintas.
I'm not sure how to say it. It's the uniform maker, basically. So they have been a more resilient player. I guess you could call it like maybe retail. I'm not even really sure the sector in which this company falls, but they did have some pretty nice earnings, snapping their 2-day losing streak, which after we did see them touch all-time highs earlier in the session, but a pretty nice move in reaction to their second quarter report. Second quarter sales growth was around 9% year over year. That figure did slightly beat expectations. Organic revenue growth also rose by 9% for the quarter. Gross margins expanded by 900 basis points year over year to 48%. We also saw operating income increase around 12% to just shy of $500 million, and operating margin expand by 50 basis points to 21%. Now, going forward, they do expect their fiscal 2024 revenue outlook to range between around 9.4 to 9.52 billion. That's slightly above, or slightly in the midpoint, I guess, of what the guidance was previously given out. But they did also raise their fiscal 2024 earnings outlook. So guidance is strong. Their results are strong.
I just don't see much of an advantage today. Most stocks are doing what you would anticipate after a leg up, 10 weeks higher. Most stocks are giving us doji patterns. Okay, here is NVIDIA, for example. Inside day. Tesla looks similar. Inside day. Broadcom. Spinning top inside day. Amazon trying to do something today. Spinning top inside day. So there's really not a whole lot going on. Let's see. What's the strongest sector? All right. Strongest sector at present, biotechs and semis. Retail is up there as well. Retail trending. Semiconductors inside day, but in the upper half of yesterday's range. So that's a good sign. RSI turned back up. So there's not a whole lot to do here when you got dojis for the most part. So I would just take it easy, wait for a direction. Direction will come if we start to pull away from VWAP in either direction, whether it's higher or lower. Watch, you got a flat VWAP. So nobody's winning this tug of war right now.
surpassing their previous record, which was around 5 billion, which they did in the previous record was made back in November of 2022. Net income also improved pretty substantially to 384 million from the losses of 1.14 billion reported a year ago. Just goes to show the way they were, some of the difficulty they were facing just a year ago. Adjusted losses per share did come in better than expected, and they highlighted they came into this year with the best book position they've ever seen, and now nearly 2/3 of their occupancy already on their books for 2024 at considerably higher prices when adjusted for constant currency. And they continue to see this really strong bookings momentum across the board. So their European
The interesting thing is, even though the markets are a bit choppy like this, the S&P is up on the day, 1/3%. So we are higher than yesterday's low, though we are starting to show a pattern of lower highs if this continues. 4,700 is the risk off point. If we start to drop below 4,700, I'd be taking more risk off. This is just in the short term. Over the next couple of weeks, we could see more consolidation. If you're in a long-term fund, I have a lot of long-term funds like TRBCX. I'm not really that concerned about the longer term. Just the short term, we could see a little bit more consolidation, kind of like what we had here at the end of November into December. But the S&P is higher. Presently, 19 handles.
It does, and they did announce all these growth plans to really expand their store footprint and hopefully bring these stores to the Chicagoland area so we can try it ourselves firsthand. But this name went public in June, pricing its IPO at around $22 a share. It has since not necessarily seen a consistent uptrend, but as of late, seen a lot of strength as we're trading obviously well above that level at around $42 a share, pushing its high of $58 earlier this year. Now, Wedbush is forecasting another quarter of upside over its conservative profit outlook for Kava. The analyst did say while they view lower grocery inflation as an incremental threat to the fast casual category in this new year, they also believe that Kava's relative value proposition and maturation cycle contributes to their overall composition and will help it overcome what could be an incremental headwind. And that's hopefully grocery store prices going down next year. I think we can all say that would be a good thing for us as consumers. Not so great, obviously, for these restaurant names, though. Now, they upgraded shares to outperform in neutral, but it was part of a broader note on restaurant stocks. I have to say, there were some other interesting calls. They named Dutch Bros on their best ideas list now. The only other restaurant stock on that best ideas list is Domino's Pizza, which I can respect that call. But then they also did upgrade Cheesecake Factory, downgraded Chipotle, as well as Wendy's, which Chipotle is like, to me, the sort of like golden child of the restaurant space.
Yeah, no, it's an interesting Cheesecake Factory, really. That's a name I haven't heard in a while.
I know.
You'd still be there reading the menu if you tried to go through. That thing is like a textbook. But Baird also likes Kava. They called a top pick, and this is from yesterday. They raised it to a price target of 54. That's up from 48. They keep the outperform rating, believing that the risk and reward is favorable. They do say that the current valuation is not for the faint of heart. So there's a little bit of a, kind of their way out, giving you a little bit of both sides of their mouth. But they do have high conviction they're going to be able to beat projections for earnings and growth next year. So keep our eye on that one for sure. Interesting that analysts like it going into the end of the year. Last one, though, and the only on the list
Meta oversold today on the intraday time frame, starting to climb back towards VWAP. Short-term scalp into back to VWAP. All right, Meta turning back up towards VWAP. Watch the volume here. Meta. Nice move underway on Meta. Volume picking up. All right, it's a 1 minute chart, so just keep that in mind. All right, Microsoft building a higher low. All right, the FANG stock's still doji pattern. So if you're thinking about big moves, relatively speaking, relative to yesterday anyway, we have doji patterns. So any move higher over the next 2 days, today and tomorrow, still an opportunity to take profits and to reduce your risk. All right, so we have 2 stocks red on the New York FANG, 10 stocks on the New York FANG. 2 of them are red. Apple's down $1 and Netflix is off $1.36. The rest are still green on the day. Snowflake is trying to stay green. It's flat. So is Microsoft. No change. All right, so above 4,700, that's our support. Above 70, want to stay above 4,700 on the S&P 500. Below 4,700 this week would be risk off. Okay, so just keep that in mind. All right, Meta. Let's look at Meta on the 15-minute, trying to turn the corner. 2 days in a row where they sold into strength, popped up again the next day. Meta on the 15-minute. All right, S&P's seeing some more selling. At the low, we have this gap down here. 4,700 is major support. If we go and take a look at spot gamma's levels,
Low tick alert minus 800.
Brent over there. Let's see, indices. Here's 4,700 right there. You can see how large the calls and the puts are at this level.
Extreme low.
That'll provide support. If we get down to that level right now, we're below 47.25 and drifting towards 4,700. 25 handles lower. Okay, I'm looking at this right here, 4,700. You can see the maximum amount of puts and calls are at that level. That'll be support for now. All right, so 4,700 right below, you can see. Oh, by the way, also make sure you are aware of that 5,000 level over here building. Okay, that level is building. A substantial amount of puts at that level now. 178 million in calls, 107 million in puts, building at that level. Okay. All right, we continue to move lower, so that's going to take everything with it. S&P moving lower. All right, yesterday's closing low is very close now. We briefly drifted below 4,700 at the close and then dropped a little bit more after hours, only to gap up this morning.
Low tick alert minus 800.
Okay, keeping an eye on Meta. Trying to get back to VWAP. Again, doji patterns everywhere, so you're not getting much of an advantage. We have a little dip, and then shorts cover, and we push back towards VWAP. VWAP is flat. S&P is still drifting lower. All right, so we're in the gap, filling the gap. Watching some shorts covering now on Apple, Tesla. So this first 2 or 5 minute candle, whatever you're watching, just a little green there. It looks like shorts covering. NVDA, no follow through yet. NVIDIA, just a doji pattern on the daily. NVIDIA. Spinning top at this point. Okay, in the lower half of yesterday's price action. So this is still pretty bearish, well below Monday and Tuesday's price action, where we were looking to get back above 505. We're still above the 920, 50-day, 200 days way down here at 400. But that's up and to the right as well. We're a bit extended from the 200-day and the 50-day, so we could come back at some point. All right, so catching the bears, sleeping. All right, there goes Meta on the bounce. Meta on the bounce. All right, nice little short covering pop off the low. All the FANG stocks saw some short covering just now. That's about it. That's about it for now. Aaron, I'm checking your January 19th. You're selling the January 19th, 130. And you're buying the 125.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a day. Another guy who charged $4 do that. Proud of the prices, charging. My dad instilled in me, always put people before. Be proud of offering a good product at a fair price. I think They'd be extremely proud.
Binge watch the market through Swabnet. Tune in 24 days a week at swabnetwork.com to get all your favorite streaming services. Schwab Network, available anytime, anywhere, on your device, for free. Schwab Network. Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime.
All right, Baidu. You're watching Meta. So if they start buying here at 1:30 into 2 o'clock, 2:30, that'd be very cool.
Wrap up the trading day with me, Oliver Rennick, the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
And I so appreciate the fact that their earnings are on a weekly option. Outside of, I guess, the night feed, which is today after the close call. But it does give us something to be excited about as far as this whole AI world. We did get that nice update. This company, which is like the chip maker, obviously, is seeing an increase. Really, I'd say just the strength.
All right, nice rally off the low.
Now, no less than 20 of these 38 analysts that are covered by FactSet raised their price target on Micron stock following their results. Average price target rising to around $94 a share from $83.50. That was the average at the end of November. JP Morgan did reiterate an overweight rating, also raising to 105 from 90, so pretty optimistic, obviously, saying these better than expected demand trends as well as the normalization of excess customer inventories, saying they believe that if the stock should continue to outperform in 2024 as the market continues to discount the improving revenue and margin and earnings power into what is leading to their fiscal 2025. Morgan Stanley said the quarter makes them feel better about following Micron's fiscal earnings underperformance as of late, though they are not yet convinced that we could see a full year back at anywhere near peaks. So that analyst was a little bit more cautious. I wouldn't necessarily even say negative though, because they did still raise their price target and say, given some of the underperformance in the AI world, this actually could still be a momentum play in 2024. So really optimistic. The same customer on average, I mean, all the analysts covering it. Buy side is definitely skewed. I mean, we have 30 buys at this point. Then the 7 holds, there are no outright sells. So I think that it's not a surprise if like the trend we see reflected in a lot of the chip stocks that still have this massive AI exposure now. This name though, with today's recent higher level, is 70% on the year.
Okay, VIX continues to drop off. Meta looking for a change in direction. Headed back towards VWAP. Trying to come off the low. Okay, market's kind of stalled right here. Still a lot of doji patterns. Still a lot of doji patterns on the daily charts. Meta. Okay, so we're doji spinning top on Meta at the highs. Every wick since Friday was at the highs. So there's been sellers into strength into this entire move, with Meta rallying quite a bit since October of last year, consolidating July through October, November, and then now it's starting to move higher again, cup and handle pattern on Meta. But on the daily we see dojis and spinning tops. So I wouldn't expect much to happen between now and tomorrow at this rate, unless something happens and we start to see this candle fill to the upside and we retake the price action from earlier this morning back up in here. If we close in the upper half of the daily range, it's a different story. Then we can reassess the markets at that point. Meta still turning. Okay, Meta still turning. All right, this is the way the markets look at present. Not too bad, with the exception of Apple being down. Google's up, Amazon, Tesla, Microsoft, Intel. Intel's up 2%, Applied Materials. A lot of the chips look good. Utilities are mixed. Energy's mixed. But everything else looks okay for the most part. Healthcare looks fine. Financials look fine. with a few exceptions, JP Morgan and Berkshire. But for us to have dojis, not too bad.
Young lady who's mid-30s, couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom, being a married mom, raised 3 children, including myself. And so once the client knew that she was hurt, we were able to talk. The client don't care how much we know until they know how much we care.
Every morning, our analysis, your blueprint for the day. Bonds, stocks across all asset classes. Morning trade live on Schwab Network. Weekdays at 9 a.m. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device or feed. Schwab Network.
No progress. Loss of downs, no forward progress. Not following through. Jay Frog had a nice day today. Jay Frog. Okay, Jay Frog, big cap jump today. Technology. Meta trying again. Meta's trying again. IWM. These cruise lines look really good. Royal Caribbean and Carnival. I was watching the YouTube documentary on the sinking of the Costa Concordia. Man, that was a trip. Royal Caribbean breaking higher.
swipe, like we've exhausted it, but it was truly a wild year.
Yeah, and so it's pretty amazing just if you think about how many different economic scenarios you went through. So like not to get like, super nerded out on the bond stuff, but basically bond market tells you that you went through like three different types of the economic cycle in a single year. Like you saw in the first quarter this big scare around regional banks and what was going on.
All right, so Royal Caribbean, RCL, CCL, nice. CCL. Okay, those look good. Trending. All right, so the Carnivals and the Royal Caribbeans look good. My mom's going on a Royal Caribbean cruise out of Florida for the holidays. I'm going to see her when they get back, and my sister. Going to go down to Jacksonville for a couple of days. DoorDash, a little bounce there at the 21 day. All right, look for it to close back above 102. That would be nice. All right. Again, any rallies would be a good idea to take some risk off. If you haven't taken any risk off in the last couple of weeks as we trade near the highs, for me, if I hadn't taken anything off last week or into this week, I'd definitely be interested in any pops to take little profits off. We don't know if this is going to consolidate sideways or pull back to the 21 day. If it loses 4,700, the S&P, that would definitely be risk off. So doji on many indices and individual stocks at the moment. So we're at a stalemate at the highs, looking for a reason for the markets to pop. Yeah, people are buying a lot of puts.
It is, and I think to speak to that, they're calling for this like magnificent top, or perhaps we could see magnificent set of stocks that would have obviously huge implications because it's 30% of the S&P 500. I mean, I don't think anyone's hoping for that. Maybe just the bears, but we will leave it there. Appreciate this, and this was fun. We should do this again, Oliver. This was a good look at last year, this past year, then we'll watch for now for Oliver and June post. It's time for under 30. We are looking at Lyft with a nice move higher today to close out. Actually, its best year on record, which would shock you given its underperformance compared to its peer Uber.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means about the bottom.
All right. Meta. Grinding along.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Tesla.
Trading the trending names every day. It's fast market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news.
Doji everywhere. Doji. VIX dropping off.
Insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Solely on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Missed out on today's market headlines? Get caught up and catch the rest at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Active Investing.
It is, and I just think, unfortunately, just like for my own coverage sake, I just look at Uber. But I was actually pleasantly surprised to see Lyft case to close out its best year on record. Shares are up, I mean, not nearly, nowhere close to Uber, but still almost 40% on the year. But here to break down what's driving shares higher today.
Okay, what's Microsoft doing? Microsoft coming off the low. Turning the corner. NVDA. Still below VWAP. Tesla. All right, turning back up above VWAP. Moving back to the top of the range, most likely. $255 and $260 are resistance levels overhead on Tesla. All right, Tesla, Meta. All right, Meta trying to get back above VWAP. We're getting close. Meta. All right, Meta about to test VWAP. Tesla back above VWAP.
is Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
VIX is still dropping. What you doing? Sleeping? Are you asleep?
Good afternoon and welcome to the Flash Lens of Media in Puerto Rico. It's 2 p.m. Eastern Time, and here's what we have coming up on today's show. We'll take a closer look at Micron and its rally after it reported an earnings beat and issued a strong guidance. Then we'll also talk about efforts to regulate AI and how it could shape the technology in the new year. We'll examine we'll examine an outlook for the crypto market, and then we'll see key trends that could define the space in 2024. So let's take a quick look at the market with only 2 hours left in the trading day. Right now, it's all green on the screen, although we have seen maybe a couple of those indices get back some of the gains from earlier today. The Russell 2000 is still pretty strong, more than 1% higher. The NASDAQ 100 also up, as well as yesterday.
All right, we continue to rally off the lows now. Microsoft, the nice little drive back into the range for today. Microsoft back to VWAP. Just tagged VWAP. Tesla above VWAP, back to the highs of the session. You can see with a flat VWAP, we just hit the lows, we hit the highs, back and forth. Let's see what Tesla looks like. Tesla on the daily. Looking a little better on Tesla on the daily. Looking for a follow through, but still inside day. for a lot of stocks. Tesla going now.
Talk about all these other companies that are making chips. Talk about NVIDIA and AMD and all these other companies that are involved in the sector. Watch those shares move into
Anthony, thank you so much for joining us. Got to ask you what you make of today's break in the year-end round. It was not necessarily a break, but markets pulled a little bit, and they look like they're trying to charge back up in the last couple of hours of trading.
Yeah, well, I agree with Kevin. We are at holiday time. Here we are Thursday, the week before Christmas. I think a lot of people are, selling, take the money, go home, and then start again in January. That's usually what happens. I think from a bigger picture standpoint, though, the question is what's going to happen in 2024. And that can be argued either way. So on one hand, you're in a presidential year. Usually 2 out of 3 presidential years, the market, the S&P does really well. But there's that other one on screen that doesn't do really well. But the market does still have some headwinds. My fear right now is that people are feeling good about things. I know that consumer confidence has been ticking down recently, but with the clients that I'm talking to, people I'm talking to, and the fact that the market's at record highs, there's almost a conflicting story there. And we're not out of the woods yet. I think that's the key. I don't want individuals going in, dumping a bunch of money in the market at the beginning of the year because the market's at record highs and they feel like they missed out. They don't want to miss out. And it's a presidential election year. And the market always does well in presidential election years. I think there's still some caution. We have headwinds. We have an inverted yield curve that recession that never come still could come. So although we want to be optimistic, there's a lot of things to be optimistic about. There's still some things to be negative about as well.
Now, that's interesting. You mentioned the recession still could come because we had yet a trade earlier this day.
Okay, so Tesla just back to the top of the range for today, flat VWAP. So we're expecting prices stay contained in this area unless it starts to build and break out. That would be noteworthy. I don't know what this guy is going on about.
Than you would think, seeing how extensive the indexes are. Look at so many stocks like the banks, like small caps, like other.
You can see Mike Santoli is on CNBC right now. You can see the NYSE, the traders in the background are just walking around with their hands in their pockets.
Michael Santoli, Kevin Perron, and Washington Crossing. Thank you both very much. We'll see you guys soon. Thank you.
And the media landscape could be shifting. Warner Brothers Discovery and Paramount Global are in talks for a merger, but it wouldn't quite be a merger of equals. What's the likelihood of a deal, and will it trigger further consolidation as companies shift to streaming? Let's ask David Joyce, senior analyst at Seaport Research Partners. David, good to see you. Can't find a lot of enthusiasm out there for this potential tie-up. Maybe you have some.
I think there's still a lot of confusion out there. These are two business models that would be somewhat complementary, but definitely synergistic. I think a combination could be possible. I don't expect that there would be antitrust issues like some other possible combinations might be, where you would have two sets of broadcasting assets. So I think that right now there's a little bit of skepticism in terms of why are they getting together? Are they rushing? Are they fearing what the future means? I don't think that they need to be going at it in a willy-nilly fashion. I think that they have a lot of assets that are fixable and buildable from here.
Would the conversation be different and more enticing to everybody if they didn't have such high debt loads? And maybe that counterfactual doesn't matter, but how significant is the balance sheet headwind?
Well, I think that you do have two different stories here. Warner Brothers Discovery is generating a lot of free cash flow on its own, about $5 billion this year, about $4 billion next year because of coming out of the actors and writers strike. They're getting back to content production, whereas Paramount, having a smaller portfolio, they are a little bit better than break even, and that means that they have less flexibility what they can do to improve their balance sheet. So I think that free cash flow generation, potential synergies from the deal, as well as growth in some other areas, such as the studios business, and the improvements on profitability and streaming, are all ways that they could help improve the balance sheet for you. But they can do it on their own, but there could be synergies from a deal that could be incremental to that.
Well, David, it's Tom. What's interesting about the two stories for Warner Brothers Discovery and Paramount, at least in 2023, has been the divergence. We've seen some real relative strength in terms of Warner Brothers Discovery versus.
All right, no follow through. Doji Day.
Does Paramount need to find a partner in order to survive going forward?
It seems like they would need to have some more scale with their businesses. They are very significant in the linear network advertising that they've been transitioning to digital. So I think that's a misunderstood part of the Paramount story. So I think, and they've got pretty good breadth there. It's still an area where there are some cord-cutting issues. But the Paramount Plus streaming service maybe could be argued as some scale and possibly the volume of production out of Paramount Studios, while it's got a great history, great library, and a number of great pieces of its own IP, that's also producing lower than some of the other peers, such as Universal or Disney or Warner Brothers Discovery. So I think in this era, the scale is going to matter more than others, but it might not require complete company merges. There could be some platform combinations, such on the streaming services, that maybe that could be a way to solve some of the issues.
Right, or everyone's kind of joked, they should just all be sellers to Netflix.
Yeah, that's definitely a whole other topic. I would say that you had the studios selling their content to Netflix in its earlier days. Then all of the studios and media conglomerates went back to the walled garden environment. So I think that does beg the question: is Netflix going to continue to be able to source strong content? But that means that some of the more legacy studios, the legacy media conglomerates,
Disney just sitting here doing nothing. Disney.
Quality content that they've made for decades in order to still have some competitive product out there.
Tesla.
Show them again, if I recall, kind of the low teens. What would it take for Warner Brothers Discovery for that to get its stock to triple from here?
Tesla needs to get above 355. If it can do that, then 360 is possible.
It's not such an obvious decision for someone who still is a pay TV subscriber to be cutting the cord. So you need stabilization in the linear subscriber market. You also need the media companies, the media owners of these linear properties, as well as their add-ons with streaming. They need to get more into digital advertising. They've been moving in that direction, but that's only about 20 or so percent of their total advertising, and that's really important for all the data that provides to ad buyers. And if the ad buyers have more data on their digital delivery of ads to the networks, that's greater pricing and that's greater revenue for these media owners.
That's a great point, David. For now, I'm sure they're trying to get a triple. Could take some heavy lifting. David, thanks for joining us. We really appreciate it today.
No follow through on S&P at the moment. No follow through. All right.
for last quarter. So there are definitely inflation is coming down, but core inflation is still stuck in that 4% range, whereas the Fed wants it at 2%. So we have an inverted yield curve at this point. The inverted
Meta moving back above VWAP now.
the yield has come down, right? The 10-year was at a 5 handle just a few months ago. Now it's dropped by 110 pips or something like that. Right? So there are arguments on both sides. My consensus is not that we're going to have recession, but I also don't think we can say we're not going to have recession. So the consumer needs to be fair about it.
Let's talk about the labor picture that you mentioned briefly. Because we have so many signs of resilience this year. That's like the perfect word to describe what happened this year. And you said that it would have to come down in order for those forecasts of a recession to even come close to being true. My question is, do you see any early signs of the employment picture, the strong employment picture fading a little bit?
Yeah, I think there are some early signs that that is actually happening. If you interviews that I did a year ago, there was a 2-to-1 job employee to job ratio, worker to job ratio. Now it's only 1.5. So the number of employees per jobs is coming down. The unemployment rate has ticked up a little bit. And now you have companies, and we've heard some of the big headline companies that are starting to lay off people, companies in the IT world that are trying to boost their profits. So there are some massive layoffs that have occurred in some of the companies that we've reported on. And I think there are some that are still going to occur. But the labor market is probably the
Check out shares of Micron. You can see if they're up 7% so far intraday or higher following the company's earnings report. As with other chip makers, investors are less focused on the numbers now and seemingly more focused on the hope for AI in the future. Let's now bring in Christina Partsenevelis, who joins us now with more on the Micron news and what it can mean for the broader chip sector going forward as well.
Yeah, well, Don, much of the earnings beat that you saw with the strong Q2 guidance and improved gross margins really has to do with higher selling prices for memory chips and not necessarily higher demand right now. So on the earnings call, management even warned that they don't expect to see volume growth in Q2 or Q3. So then you're thinking, how can the street be so bullish? With, for example, Rosenblatt analysts hiking the price target by $40 to 140 when it's not about demand. Because for Micron, this is all about keeping supply low. And the street believes the company will stay disciplined doing so. For example, manufacturers have been cutting back on production to clear excess inventory. That means less supply. Secondly, Micron is pivoting some of its underutilized equipment to make more advanced memory that is used for those AI systems, further limiting supply since it requires more effort, more wafers. It's just a little bit more complicated. And then you have Micron CEO who was on CNBC this morning and called the bottom for everything from PCs to smartphones, but did admit data center supply still remains high. So if it's a little bit high, that means customers may not buy as much. But Micron assured investors AI is here to save the day, to your point, Dom, and demand will increase 2 quarters out from now. They even name dropped NVDA, saying Micron's chips are close to qualifying for NVIDIA's next generation AI product.
All right, Meta pushing a bit more now.
For now, this is a volume game, and Micron intends to keep it low.
All right, Christina, thank you very much, Christina Partsenevelis. 2023 has meanwhile been a busy year for the cybersecurity community, battling attacks growing ever more sophisticated and advanced. Speaking of AI, they're also getting more expensive, with IBM data showing an average breach now costs $4.5 million. For the U.S., it's actually more than double, which is nearly $10 million per breach. What can companies do to best protect themselves from threats in the new year? Let's ask our next guest, whose company provides enterprise threat management systems. Gary Steele is the CEO of Splunk. Gary, welcome.
Thank you. It's great to be here.
So just last hour, one of our guests had some cyber names as stock picks, and every time investors like these names, one of the things I hear from the investing community as well, if these companies are so great, why can't they prevent these cyber attacks from happening in the first place? So maybe you can explain a little bit.
Yeah, no, I think it's kind of simple. The cyber threat actors continue to up their game, and AI is going to, for example, AI.
Okay, markets rallying. There goes Meta. Tesla testing the highs again. Meta back above VWAP. Like Tesla and all these doji patterns, expecting price to get back maybe to the high of the day at best. the way we started the day. Got a flat VWAP. So unless that changes, unless we start to see lots of volume, it is 2:20 on the East Coast. I'm your host, Custom Mini, coming to you from theclosingprint.com. This is when we start to see institutions buying if they're interested.
Yeah, no, I think if you go to a global 2000 company and talk to their executive in charge of security, you're going to hear from them that they have well over 100 products that they have deployed across their enterprise. And because the attack surface, meaning the places where cyber actors are going to come after you, continues to grow as digital footprints grow, that number of vendors continues to grow as well.
Gary, it's Dom. One of the things we often talk about is how much companies are going to want to spend on this kind of threat protection, threat assessment type technology. Can you tell us about any visibility that you might have, that Splunk might have, into how budgets are shaping up in the coming year or two? Are they increasingly getting larger? Are they starting to slow down a bit? What exactly do the trends look like?
Yeah, no, great question. And I think
Moderna turning the corner. Moderna. Okay, making a higher low. Looks like an ABCD pattern on Moderna.
In this context, I do believe that cyber budgets will continue to increase because of the landscape and the level of issues that organizations are experiencing. So this has been, I think it's taken many years, but organizations will continue to spend money on cyber, and budgets will increase as we move into the new year.
Does that $9.5 million figure include all of those vendors? Because that sounds about right to me. I'm just very surprised that these companies and are it means, some ask, are we still not being tough enough on crypto for the roles that might play, for instance, in ransomware attacks? How big is that aspect of the threat in terms of, the fact that this is still an ongoing area where maybe companies couldn't have been attacked like this in the past?
Yeah, ransomware is going to continue to play a role, and you would have thought that we would have seen ransomware decline, but it actually, we've seen the threat actors win, that companies do pay ransom. And while crypto plays a role there, they'll find another way to exploit dollars if they need to. So taking away crypto doesn't necessarily solve that problem because the threat actor will still find a way to go drive a financial outcome for themselves. This is a very tough field, and I think the threat actor community continues to get bigger, not smaller.
Gary, before we let you go, just a few seconds left here. What's the big thing that's going to be part of that cybersecurity story next year, 2024?
I think the big thing next year is we're just going to be in a very different world where we're entering an election year, and typically we see more nation-state actors active in the threat landscape. And so I think the big thing next year is we're going to be talking about a wide range of threat actors and the kinds of activity that we're going to see from them. So our message to all of our customers is we need to stay vigilant, and we all need to lock arms and do everything we can to protect what's at risk.
It will be an eventful year for sure. Will be. Gary Steele, Splunk, thank you very much. Come see us again soon.
Thank you.
All right, having power lunch here. He's making a list and checking it twice. No, I don't mean Santa Claus. Tim Seymour's in the house, and he'll tell us which stocks are on his naughty or nice list ahead of the holidays. But first, we'll take a quick break. Stick with us. We'll be back.
All right, VIX is trying to turn the corner.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Lane.
Welcome back to the watch list. I'm Renita Young. Now, as you know, 2023 has been a year dominated by the emergence of artificial intelligence technology. And where the technology goes from here will be shaped in part by how it's regulated. So for some insights into the road ahead, let's welcome in Jason Sharon, Field Chief Technology Officer of Cognize. Thank you so much for joining us, Jason.
Thanks, Renita. It's great to be here. How are you doing?
I'm doing well, thank you. Now, this month, the European Union's Parliament reached an agreement on new AI limits. What's that big picture look like for you, just from hearing about it?
I think it's interesting. They took a very initial approach of trying to introduce regulations. I think their intentions are very good. They're taking a framework that makes sense, which is a risk-based approach. Trying to categorize exactly how it risk level might present depending on how they use. So I think their intentions are great. I think it remains to be seen what ultimately gets adopted and how that shapes the industry. But I think that as a first intent, it's not bad, but it'll really dominate how people think about regulation in other countries as well as this either emulates or maybe.
All right, Moderna continues to wind higher. Mara moving higher. Meta pushing through VWAP. Microsoft pushing through VWAP. Meta still looking good here. Meta continuation. Looks like it wants to keep going. Meta.
Perhaps I may find something that gets used in a high-risk area, and now I need to comply with all these regulations. And so sometimes regulatory attempts like this will drive investment and innovation into other regions where there's a lower risk of that kind of lose play.
I think you hit the nail on the head with that. That is a big concern also. So how do you feel like AI companies may respond to something like this?
Well, it's interesting. It gives you a little bit of insight in the direction where this might go. But I guess the greatest impact of companies like us are what our customers are asking for. And so I Cognize we work in the heavy asset clean energy, chemical manufacturing, power and fuels. And those customers have very stringent requirements around privacy, security, and the ability to verify the correctness of what AI solutions are providing. That sort of requirement coming from the market plays a much bigger role on companies like us to make sure that we're providing solutions that are going to meet those stringent requirements, which are often more stringent than regulation. So sometimes regulation is attempting to control something that is actually best regulated by the market dynamics of the customers who are going to use these things.
That's true as well. But you know what else? Like you can argue that it could actually help innovation as well. Because when the White House banned NVDA from sending its chips over to China, they made a new chip that was outside of the ban. You know, do you see any other examples like that possibly making it in?
I do, and I think what you'll also see is China developing their own chips to compete with NVIDIA. Okay. I think you'll see the same thing from an AI standpoint, right? Which is there's
there's actually a robust open source community involved in AI. And so where you might have companies, the bigger players,
XPT February futures at $73.89 a barrel. That's down 33 cents or 0.44%. Diesel January futures at $2.69.
so there's a little bit of a challenge with the cap already out of the
Gasoline January futures at $2.16. And natural gas January futures at $2.57.
I think it really is going to come down to data. There's going to be, I think that you're going to start to see
Okay, that's a pretty good sign coming off the low, and we still have buyers coming in. Not too bad.
So I think the big innovations you're going to see are going to come from how people are able to use their proprietary data in really interesting and innovative ways.
All right, so we're just grinding back up. There goes Meta, pushing off a VWAP now. Volume, look at the volume coming in on Meta. Noteworthy volume on some of these stocks after it came off the low. Initially, right around 1 o'clock, we saw shorts covering. That turned into people taking a chance, buying, and then people chasing after it's been off the lows already, back through VWAP and rising. So looking pretty good so far. I've still not changed my mind as far as putting on additional risk. We'll see how today fares going into Friday. Over the last week, we've been taking risk off the table. Less interested in putting more risk on at the moment because we've had a nice run for the last 9-10 weeks since the last week of October. Nine weeks. All right, nice little rally. All right, starting to push a bit more now. All right, nice little rally. Okay, Meta continuation. All right, the NVIDIA turning back up now. We'll see more conviction like this going into the close would be nice. Tesla, like to see it above 255. It's 253.25 right now. Tesla still has a lot of work to do. In phase, inside day, but looking very strong. Momentum is clearly more bullish. Looking for in phase to continue. And these solar stocks.
Welcome back to the watch list. I'm Renita Young in for Nicole Kevin. Now let's take a look at markets with 90 minutes left in the day. Still all green on the screen, right? We have the Russell 2000 still up by the most, about 1.2% higher. The NASDAQ 100 and the S&P 500 both up more than a 0.5% still. And the Dow is not too far behind, up close to 0.5% on the day. Now, for a market update, I'd like to bring in Ben Lichtenstein, Senior Futures Contributor and host of Futures here on Top Trading.
Just waiting for more follow through. Just kind of tapering off. Buying volume. All right, Tesla. Got to get above this high of the day. Tesla. Trying to push a bit higher. Okay, Bitcoin at 44,000 levels, a big level for Bitcoin. NVDA trying to turn.
weeks ago, and the new goal was to outline what we're seeing in the crypto asset landscape. And when we look at the Bitcoin specifically, we have three major topics that are going to dominate the narrative next.
All right, pushing through now. Okay, that looks good. Got more stocks participating. All right, there goes Amazon coming out of a squeeze. Meta pushing a bit higher. There goes NVDA turning the corner. Okay, Apple's starting to move. So is Microsoft. All right, everything is starting to participate.
Together with that, we have the Bitcoin halving coming early next year. So probably April or May of next year, we're going to have like an event where basically the inflation rate of the supply of Bitcoin issuance drops by half. That happens every 4 years. Historically, this has been very positive for price action of Bitcoin. And we also have the macro tailwinds, right? So we're seeing now the possibility of the Fed dropping interest rates starting next week. So if you get all those factors combined, we are very optimistic about what could happen with Bitcoin next year. We will have possibly a demand shock with a Bitcoin ETF being available in the US and a supply shock with the issuance of Bitcoin dropping by half, all in an environment that's going to be favorable for risk assets. So the macro tailwinds are going to be favorable. So like we couldn't be more optimistic about this. That tends to change. We'll talk about the regime shift on crypto overall because this is a new phase for Bitcoin. This is when we leave the speculation.
All right, Meta getting some traction now. On the move. Meta. Go, Meta. Go, Apple. All right, looking good. Looking good. All right. Nice.
Regime shift in Bitcoin. And when you look at the other crypto assets, we're also very positive about this because when you look at blockchain space and smart contract platforms, we're seeing regulatory clarity basically all around the world. Like countries are regulating intermediaries and are regulating this technology in a way that looks like it's going to incentivize adoption and innovation.
Okay, looking good. Tesla, come on, Tesla. You can do this. NVIDIA. Looking for NVIDIA to push through. NVIDIA. All right, we're right at VWAP now. Best we can hope for is the top of this range for now. Unless we break higher. If we break higher and VWAP starts to turn up and to the right, we only have an hour and 15 minutes to go in the regular session. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Thursday, the 21st of December. 4 days to go. 4 days to go. Okay, there goes Tesla. Tesla on the move too. Tesla on the move. Okay, so the FANG stocks are getting some participation now. FANGs are participating. Tesla. Okay, let's look at the New York FANG index. This is all 10 stocks. New York FANG trying to turn the corner. That's these 10 stocks. New York FANG index is 10 stocks. You can see the current weightings. Looking for these to follow through. Okay, looking for a push back up to the top of the range as these stocks start to participate. All right, looks good. Amazon on the move. I wanted to take an Amazon position. Amazon. Just above VWAP in a doji pattern. We can wait until tomorrow. You know, with all these dojis today, what would be great is if all of these close in the upper half of the daily range, and then tomorrow we'll get a bullish day. It is Friday, so going into the Christmas holiday, I'm not sure that I'd want to take anything tomorrow. But we'd like to see a nice follow through next week too. Okay, recall what I've told you several times now. You're probably getting tired of me saying it, but the FANG index we saw back here in October, the end of October, we saw a 10-day move. On day 10, it turned out to be a fade. So it was 9 days up, Tom DeMark style. 9 days up, we had 1 day fade. Then we continued higher for another 9 days. Nine seems to be the number. Then 9 days down before we bounced. And then we had 9 days up again. Yesterday was day 10 and we pulled back. So today starts day 1. Can we get a nice follow through? I really doubt we're going to continue to move higher unabated. It's enough that we got the bulls to show up and the shorts to cover so far. 9999. I mean, that's 4 nines, 28, right? 36. Looking good. All right, so you got 9 there, 9. You got 9 here, 9 there. You got 9.
What we believe is going to happen is as Bitcoin transitions from a non-consensus store value to a consensus store
9 there.
will go down naturally.
And another 9 on the way up right there. So that's pretty cool.
It's going to take Bitcoin prices to another level, but also can make the volatility go down significantly.
All right, Samir, I don't know
9999.
about that, but we will keep our eyes on it. Thank you so much for joining us here with the live. Different perspective on its earnings. Today's big gains in trends
Very cool.
semiconductor and memory space.
All right, MACD started to flatten out. Now it's turning back up. You know that we're above the 200-day moving average on advanced decline, New York Stock Exchange advanced decline. 2,700 stocks on the New York Stock Exchange. The composite's 2,000 stocks. Let's look at the composite. The composite is the NYA. NYA is the 2,000 composite. Okay, it's hanging in there. Advanced decline, NYSE. Let's go take a look at that. NYSE advanced decline we talked about earlier. Not crazy about volume turning over here on the New York Stock Exchange McClellan volume oscillator. That's telling you volume is drying up at the high. Okay, here's the MYHL. We're above the 0 line. And you can see in the middle panel, advanced declines making new highs above the 200 period moving average, the blue line. Producing blue elder sticks on the New York Stock Exchange at highs. So that's a blue elder stick is telling you pause, whether it's at the highs or at the lows. You got to pause here. So I'm thinking we're going to consolidate here for another few days, but that's just what I'm looking for. It doesn't mean that's going to happen. If we get a bullish day tomorrow, that would be great. Microsoft, Tesla. Okay, looking for a follow through. Mullen. What was it? That's Mullen Automotive, right? Don't they? What do they do? They do some sort of radar or something like that. Oh, that's a big day. Wow, 20 million shares. That's shorts covering initially, right?
Yeah, I mean, it was the best part of the outlook was the long bomb. It wasn't the sort of short run across the middle passing. It sounds like this next quarter might be a little bumpy.
Mullen. What do they do? They're some kind of radar or whatever, right? Automotive related. $100 for one reverse split. Okay. Let's see. Mullen Automotive delivers 38 Class 3 vehicles to Randy Marion Automotive. Wow. Now, if it was 38 Ferraris, one of the more expensive versions, yeah, I can see that. Or 38 Veyrons.
We did, Renita. It was a very good quarter for Micron. We're seeing rebounds in both the DRAM and the NAND markets, which are coming off of precipitous declines in Micron's fiscal 2023, its last fiscal year. And we really think our recovery thesis is continuing to play out with the results last night. We expect really strong growth in fiscal 2024 and fiscal 2025. But stepping back and taking this into a long-term context, Micron remains a cyclical stock. It's very heavily weighted in the memory markets. Over the long run, we expect to see upswings like we expect in the next 2 years, downswings to follow, so on and so forth. And so when we take that long-term view, we just think shares look a little overvalued right now fundamentally.
So then what kind of trends do you think are worth investors watching when it comes to Micron?
Well, we definitely think there are numerous attractive secular trends.
I don't show any options trading. No volume.
But simply put, we just think that the memory industry will continue to be cyclical. So we see the stock go up when there are periods of strong demand outstripping supply, but it's just as prone to periods of a glut of oversupply, triggering pricing beyond fiscal 2023. And so we have to take that balanced outlook for long term.
Okay, so no follow through. We're at resistance. Let's see, Mara continues. Mara, new high of the day. Mara, new high of the day. Yeah, Mara looking good. Mara, Marathon Digital going. Okay, Marathon Digital, this is pushing at the highs. I took a credit spread on this one. Ooh, when was it? Last week sometime. I took this credit spread. As long as it continues to move right, you can see that indication where price is currently down there in the bottom, 24.43. As long as this keeps going to the right, not only will I make money on the credit, but theta will kick in. Theta is $4 a day. Theta's $4 a day. Looks good. I have a bunch of credits, one on NVIDIA, a credit spread on NVIDIA, credit spread on ARM Holdings, looking for ARM to continue higher. That's kind of flat right now. Meta and Microsoft. Did I say NVIDIA? And NVIDIA. So those are all working. And again, that's the credit spread. Seven delta, 23 delta on the MARA contracts. That continues to drop that number. All right, we're starting to move a bit lower now. All right, so there's sellers coming in. All right, here comes the sellers. SPY. All right, so no follow through. Flat VWAP, not unusual with a flat VWAP. We don't expect a lot of momentum, up or down for that matter. So here we are, right back to VWAP, narrow range. Yeah, just about everything is showing you the same sort of picture inside day. Here's SPY and inside day. You got a flat VWAP, so that's telling you look for price to stay close to VWAP. Occasionally, it'll move away. But you can see the 9, 21, 50-day are all rising. The 9 EMA is the dotted green line. The red line is the 21-day, and the green line, solid green line, that's the 50-day. They're all pointing up and to the right. So this recent run-up that took, 1, 2, 3, 4, 5, 6, 6 days before it went sideways for 5 days, including today. We're just consolidating this recent leg higher. So we want to stay above 470, 4,700 on the S&P 500. S&P 500, we would like to stay above 4,700. If for some reason we were to drop below 4,700, that would be risk off. The reason being, I can show you on the gamma right here. You can see the gamma at the 4,700 strike. There's 200 million six of calls and 194,800,000 in puts. So that's structurally an area where we would see a bounce, okay, right in this area. We're right above that at 470 S&P 500 is currently trading 47.23. So we want to stay above this level right here, 4,700. Okay. So that's what it looks like right now. S&P 500. Flat VWAP. We're between support, 4,700, and resistance, 4,750. Flat VWAP, not surprising. We have no momentum today.
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
All right, we got 1 hour to go, 1 hour to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's the 21st of December, 4 days until Christmas, if you celebrate. If you don't, that's fine too. All right, we ran right into VWAP and got rejected. Notice stochastic RSI on the lower panel is getting oversold quickly, so maybe we make a higher low. At that point, once we get oversold in turn, looking for a higher low. Love to see a close higher. We're currently green on the SPY, 0.5%. Futures are trading 47.72, up 22 handles, so that's not too bad. Futures are at 22. Futures are at 72 even. 71.75. All right, so we're right around 72, 47.72 futures. All right, CarMax. I want to go back and look at CarMax now that the news has dissipated and maybe people have taken profits off. I'll go check implied volatility here shortly. CarMax, big fade on the day. Okay, so that black candle, you get a black candle when you get a gap up and we're still fading. If we were to drop into where we closed yesterday into that red, this candle will turn red. It's just the way stock charts indicates price action. Okay, so CarMax, let's see what the intraday chart looks like. All right, so it just faded. I don't know. I'd be interested in CarMax. Let me take a look at the earnings numbers. Earnings. Let's see what CarMax, what they say on CarMax. Okay, beat expectations. CarMax beat expectations. Earnings growth 117%. Earnings growth of 117%. While the company revenue fell 5.49%, the company did beat by 33.3%. With that 33.3% beat, earnings growth is coming in at 117%. So that looks pretty good. Revenue growth, not so much. Revenue growth is flat, slightly lower, 5.5%. So maybe CarMax is a potential trade for you. What I generally like to do is after a flag breakout like this, I want to see if this consolidates where volume picks up again. Volume looks pretty good so far today. CarMax. Now you could sell a credit spread, something underneath the 200-day, like the 72. Sell the 72, buy the 70, something like that. Let me see what the implied volatility looks like. CarMax. And let me just check the charts. CarMax. Okay, CarMax. The dip right here is starting to get bought. All right, CarMax starting to get bought on the dip. Mara looking good. Steven's up almost 100% on that. Nice chain. Nice trade there, Steven. Can't speak. CarMax. What the frig's going on here? What's NIMO doing? NIMO's at 28, still above the zero line. NIMO's been above the zero line since the last week of October. So that's sort of a divergence. CarMax. All right, so implied volatility is back down to 37% on CarMax. So that got crushed. Okay. Okay, so options are back below historical levels. Implied volatility Historical levels of volatility on CarMax are 45%. Right now it's at 37% and still dropping after earnings. So if you're thinking about a trade on CarMax, option-wise, a lot better situation. You could also wait until tomorrow. Let's see, CarMax, January. Let's 72. Let me see what the 72 put looks like. CarMax. It's bullish. CarMax 72 put. Okay, still more fade coming in. You can hear that bearish flow in the background. Okay, no follow through. Looking for a higher low on SPY. All right, just watching CarMax. Potential trade here is to sell to 72.50 and buy a couple of points lower. It's got a 37% on the January or February options, 37% implied vol, and buy something close underneath for protection. 5 strike ride wide would be a 67.50. Buy the 67.50, sell the 72.50 for February. That's a $110 credit, $115 credit per contract, and about $375 in risk per contract. Well above a break-even level. All right, so looking for CarMax to bounce after this initial selling, and look for it to follow through. Okay, so earlier this morning we talked about Moderna. Yesterday, Mr. Smith mentioned it. It turned out to be a bearish day, so no big deal. Following through now, Moderna, another candidate in this group, Illumina, also moving higher. All right, those are part of the 25 largest stocks in the IBB biotech, NASDAQ biotech index. Okay, so let's take a look at these. All right, so Moderna is up 5.5%. Looks good. On a weekly basis, Moderna is up 5.6% for the week. For the month, 17% for the month. You can see the reversal, 3-candle reversal on the monthly. Volume coming in. So Moderna looks pretty good. I'm thinking this is going to continue. Breaking this downtrend, if you look at the weekly, okay, a clear downtrend. Let me just zoom out just a little bit so you can see what's going on here. All right, since the height of the COVID issue back in 2021 when Moderna was riding high, okay, you can see, well, a couple of times we've broken trend. All right, down, lower highs, lower highs, lower highs. We broke a downtrend. If we take this wick over here, we just run along here. Okay, you can start to see what we're looking for. Okay. Trend break. Okay, we're looking at this to start to move in the opposite direction, starting to move higher. You can see the volume has picked up. Okay. Okay, volume picking up. Like to see this momentum start to turn, the rate of change, KST. All right, so that's Moderna. Where'd you go, Moderna? There you are, Moderna. Okay, looking for this trend to start turning back up. And if we look at the daily, we can see that trend break is starting. We're above the 50-day. That's the first line of reference for me. I like to see price action back above the 50-day. The 200-day is the next target. Should we get through 92.50 to 95? You can see volume has picked up, though it is tapering off on this last leg higher. Looks like it's starting phase two. How do we know phase two? Phase two is after institutions accumulate. You can see accumulation because the moving averages move sideways. Once the moving averages start to turn up and to the right, that's when we know that the momentum and the buying on average, because this is a 9-day moving average, EMA, 9-day exponential moving average, we know that price action is beginning to make higher highs and higher lows. You can see stochastics turn up. That's telling you to look for closes in the upper half of the daily range on a rolling basis. You can see the last time this turned up, stochastics turned up from 20. We started seeing closes in the upper half of the daily range. MACD turned, RSI turned from low, moving through 50. So now we can see that most everything is in our favor. While never a guarantee, if you were taking a position today, I would put a stop underneath today's low or underneath the 9 EMA, say around 85.50, something like that. About a $7 stop or so. But look for or you could wait until tomorrow. If we get a follow through tomorrow and we take out 95, then you could try a trade there. Just know that the average true range per day is about $4.65. It's currently up $4.80, so it's already 100% of its ATR, and we think that it's probably full value for today. Now, if we start to see this move higher into the close, that would tell us that it's maybe a range breakout, but I don't see that happening right now. Moderna is just grinding along. The other thing is, if you look at Bollinger Bands, okay, you can see how Bollinger Bands have opened up top and bottom. That's telling you to look for a fast move. We don't see the fast move yet. RSI is rising. It's telling you what direction. Okay, so that it looks like we're going to continue higher. For the last 6 trading days, we've been outside the upper Bollinger Band. That's okay because we're changing trend and Bollinger Bands are opening up top and bottom. Again, telling us to look for a fast move. Volume is there, MACD's there, momentum is with the bulls. It's the bulls to lose at this point. Now, what would help is if more stocks in that group of biotechs, let's just take a look at IBB. IBB as a whole. Okay, you can see higher highs, higher lows. We're above these pivot highs over here on the left. Stochastic a little overbought, so the majority of stocks in this index are probably a little overbought right now. So looking at the stocks herein, okay, you can see most of these are green. There's only like 4 of these out of 25 that are red at the moment. So that's a good sign. 10 times genomics, TXG, that was one we mentioned earlier today as well. Inside day. Illumina, where'd you go, Illumina? There's Illumina right there. Illumina. Doji now, a little gravestone Doji. These should continue higher, I would think. BioMarin. Okay, inside day. Biogen. So we want to see more of these stocks pushing higher. Cat just grabbed my arm, scared the crap out of me. She snuck up on me and grabbed my arm. Look at Biogen. Higher low at the 9 EMA. Volume looks good. RSI rising. Let's see what the Bollinger Bands look like. Bollinger Bands. Another one. Bollinger Bands opening up. See how the lower Bollinger Band turned inward? Okay, that's telling you look for a flag. That upper band, though, is starting to turn and continue higher. So that's telling you maybe let's see a grind along standard deviation 1 and 2. Standard deviation 1 is the gray area. Standard deviation 2 are the outer green bands. Thing about Bollinger Bands is it tells you 95% of price actions contained within the Bollinger Bands by design. So we know that we're in the upper half of the range. We're seeing this bullish shift. Volume is there confirming. RSI is rising. So if gun to head, I would say Biogen and these biotech stocks will continue higher in the coming weeks. XBI was leading this morning. It's an inside day after a big drop yesterday. Okay, let's see what sectors were doing the best. Materials, inside day. Communications, okay, at the top of the bands. XLF, I'm going to exclude XLE because it's not doing that well. Financials doing okay. XLI, industrials. Okay, what did Caterpillar do? Caterpillar is still hanging out at the highs. You see that lower band turning up? Telling you to watch the upper band. If it does come down and both of these start to converge, look for price action to move sideways. You see how over here on the left in August, the lower band turned up, the upper band turned down, and what happened? Price action started to consolidate. So watch these bands. It tells you a lot about what to expect. So if you're taking a long and you think, oh, this is going to just keep going, I just know for sure it's going to hit 300. Watch the Bollinger Bands. So that'll tell you whether or not you're going to start to consolidate or whether the trend could continue in a fast at a fast clip. So right now we're watching Caterpillar. What's John Deere doing? That was formed a base. Okay, it's above the 200 day, so that's a good sign. Looking for that to follow through. All right, so S&P trying to move now. Inside day on the S&P. Let's go take a look at the S&P 500. All right, so we're in between support and resistance. We just got a little buy signal here. Okay. At VWAP, look at the volume coming in now and look for follow through. More than likely, we're going to stay between 4,700 at the bottom of the chart, 4,700 and 4,750. Looks like price is contained there. All right, S&P 500. Watching the S&P now. With 40 minutes left to go, I'm your host, Cousin Vinny, coming to you from theclosingprint.com, here with you with the play-by-play until about 4 o'clock p.m. every day from 9:15 to 4 o'clock. All right, so we're watching the markets move higher. All right, Tesla. Tesla looks like it's going to go. Watch Tesla here. Tesla breaking above these pivots from this morning is key. All right, we're starting to move. Now, keep in mind, Tesla, you have, let's see if I have an updated version here. So Tesla, you can see that 255 is the first strike that we'll run into. This is not up to date because I know that 260 is the next level overhead for Tesla. Let me just grab today's update. I did that earlier today. Okay, here's Tesla's update. I'll get rid of this one. Okay, here's today's update. So if you're trading Tesla, look at 255 and 260. Those are resistance levels. Why is it resistance? Well, Money Magic puts these together for you. You've got, 11 stocks, 12 stocks, the FANG index plus AMD and one other one. So 255 is significant because there's a lot of people that have calls there. That's why it's green. It's a call wall, okay? Once it gets to 255, what happens? People start taking profits. As it's starting to come up to 255, people are taking profits. That's supply. So if we can get through 255, that means we're overcoming supply and demand is much stronger. So we can proceed to the next level, 260. Doesn't mean we go directly there. It just means that above 255, there's more demand than supply. Once we get through 260, then you can look for higher prices, not until then. Okay, so 260 is the call wall for now on Tesla. Let's go look at Tesla on the daily time frame. Tesla. All right, so that's Tesla. Hope that made sense. The call walls are resistance. That's basically it. People will start to sell there. Tesla. All right, so a Darvis box. We were talking about Tesla's Darvis box. All right, just another way of looking at price action. Okay, this Darvis box contained price action for 23, 24 days. It came back in yesterday. Now we're trying to push back up. So a decisive move through 260 is needed. Then 270 can be assumed. But for now, we're trying to break through this area. All right, I'll get rid of this Darvis box now. You know what I'm trying to accomplish here, or what price is trying to accomplish. We're trying to break through this area. All right, so once we're through this area decisively, then we can look for a breakup at 270 and 278. Okay, so there you go. There's your levels of resistance overhead. RSI is above 50, so that's a good thing. Okay, Tesla. All right, so we're trying to make it to new highs. Tesla. The way I choose to play Tesla right now is to sell credit spreads. Once we get above 260, then I can start to look for maybe buying shares, selling covered calls, something like that, or doing call verticals, anything bullish. Right now, I have a bullish setup in that I have a credit spread that I'm looking for price action to move higher. My son has it as well in his account, his trading account. All right, so the 235, I sold the 235, bought the 230. That is a January 5th expiration. So let me just put that on the chart so I know where it is. Okay, I sold on the dip, I sold the 235, 230. All right, so 235, 230, 235, 230. 235. Oh, come on. $235, $230. Let me just pull this up. All right, 235. You can see I've done a previous spread here. 235, 235. That was last couple of weeks. 235 put sold. Okay, let me just change the number here. Coordinates 235, 235. Okay. Okay, so I know that I have the 230 below that. All right, so Tesla. You can see as we pull away from 235, as we pull away, you don't see it. As we pull away from 235, I don't see any possibility of getting down there. The 235 put on Tesla is currently what delta? 235 is a 19 delta. So the 80% probability this trade is going to work for me, 20% probability, just based on options. It's just the expectations. It's not a guarantee, but it's using options pricing and the Greeks to arrive at an expected move. Right now, it's we're not expecting. We have a 19% probability that we get down to 235 based on the options pricing. More than likely, we're going to push higher, 80% probability. If you went to Vegas with 8% probability, you'd be pretty happy. Now, the key to selling credit spreads, put credit spreads for me, I'm sure there's other people, other ways of doing it, but I like to see the dip And then once I see the dip starting to turn, that's where I start to think about selling a put credit spread. I don't want to sell a put credit spread at the high of the day, because once it gets to its ATR of 100%, then I know that it's going to start pulling back. So I'm selling a put spread at the wrong time. I should be selling a put spread as price is pulling back, because premium is increasing and people are getting scared. They're buying puts, whatever. And once it starts to reverse, then I can sell puts for credit, buy one below, in this case, the 230, and then I can just watch price action move away. Therefore, it's a bullish setup. So I collect the credit up front. As long as it works in my favor, 80% of the time it will at this point. Then I collect the credit plus theta as it kicks in, because theta on this is $20 a day. $20 a day theta on the 235 put as we move away from it. Like I was saying before, if Tesla manages to break, okay, I will get long shares most likely. If it gets above 260, then I'm going to buy shares. I'm probably going to sell a covered call. Maybe do the wheel strategy on this one. You could do a wheel strategy. If you don't know what wheel strategy is, go on YouTube, check out Invest with Henry or S&P Cap. There goes the S&P. All right, we're starting to rip higher now. Check with Invest with Henry or S&P Capital and look for the wheel strategy. Basically, what you're doing is you're selling a cash secured put. And if you get assigned, you immediately turn around and buy shares and sell a covered call. You're selling the covered call at a strike that you know you're going to get taken out of. Once you get taken out, you continue the process. You sell another cash secured put. And it's called a wheel strategy because you're just basically doing this over and over and over and collecting premium. As it moves higher, or if it moves lower and you get assigned, then you immediately have the shares assigned to you. You sell a covered call, and you just repeat the process as the stock moves higher and takes out your covered calls. It takes your shares away. You turn around and you sell cash secured puts again. It's a pretty neat strategy. Some people use it for consistent income, especially people that are retired. All right, so everything is working in our favor now. Okay, Tesla, as you can see. All right, I'll show you Tesla here. Okay. Okay, Tesla working. Let me show you my credit spread on Tesla that I've had since the low earlier. Okay, so here is Tesla currently. You can see how this credit spread is working. All right, so this credit spread, the red line is the put that I sold at 235. The green line is the put that I bought for protection. There's a defined risk. There's a maximum amount I can lose. It's not like if you sell naked puts and this goes against you and keeps going against you, you could lose a crap ton of money. Okay, so as this is moving away from me, these puts are becoming less worth, less valuable. Okay, moving away. Plus, you got theta kicking in on top of that. So that's why I like credit spreads on stocks that are in a bullish trend. You can see Tesla is clearly in a bullish trend. Higher highs, higher lows, above the 50, above the 21 day, above the 200 day. Higher highs, higher lows. That's where you want to sell credit spreads for income. It's not for everybody. It's a level 3. It's a level 3 option strategy. Okay, so you have to have level 3 approval on your brokerage account to do this. I do this in my IRA and my trading account. All right, so Tesla is definitely moving in the right direction. The likelihood of dropping down to 235 would mean a retest of the 50-day. It's possible, but there's about 80% probability based on options that I'll be right and this will move away from me. Okay. Conversely, if I were to buy in the money calls and Tesla, so let's say I bought the 250, the 250 call would be probably a 60 delta. 60 delta, yeah. So 60% probability this 250 call is going to work for me. The issue is how long does it take to work for me? Because I have theta working against me, $22 a day. So this needs to get going immediately if you're going long just a call. A lot of times it's better to just sell a vertical. In other words, you buy a call and you sell a call overhead. I would probably sell something north of 265, 270 if I could get a decent price on those rather than just go straight call, because I'm short the call that's up high. And if this doesn't move as each day goes by, that short call overhead gains in value. So it dampens the loss that I'm making, that I have on this call that I bought. Anyway, there's another way of doing it. Or you can just buy shares and sell a covered call. All right, enough on Tesla. Okay, enough coverage of Tesla. Let's take a look at Meta. Meta's another one that I have a credit spread on. I'm looking for this price action to move away. All right, so selling a credit spread at the low of the day, you can see how the puts lose value as price action moves higher. So the credit spread makes money for you. Okay, what else? Microsoft. I have a vertical and I have a credit spread on Microsoft. So both of those are bullish setups. The vertical, long where am I long? The 375 and short the 380. Pushing higher. All righty, looking really good going into the close. There goes the S&P 500. Okay, so, oh man, this looks beautiful. Remember the FANG, New York FANG. Okay, let me zoom in on this for a minute. Let's go to 8 months. Okay. All right, so look at how many times we've got a 9 here. The October low, 9 days up, what happens? We move sideways. All right, so 9 days, we move sideways. We take a break. Then we start a bullish trend again. 9 days up, what happens? We hit a high. What do? We fade for 9 days. This is pretty cool. 9 days down, we bounce. What happens? 9 days up. What do? We paused yesterday. Now we're starting day 1 again. Now, Tom DeMark calls this a 9, the 9 setup, right? 9 and 13, I believe. I haven't used DeMark in a while, but I think believe it's 9 and 13 days, right? All right, CYTK. I see Jason talking about CYTK as well for a takeout. Cytokinetics. All right, I can't trade it here. It's just too far gone.
that break even gets above $20 for these traders, that's about 5% revenue per share price. And if the pace of stock is going onward, that could be eclipsed by the end of tomorrow or by the end of the year. But call volume double daily average volume we've seen over the last 5 trading sessions. Even though volumes are starting to spike up here a little bit. Yeah, pretty decent report. They missed on the bottom line. Revenues were a little bit better than expected. But I'd start looking at those metrics where they can actually grow gross margin and that's pretty good because there are questions about the full viability of travel has been COVID. It's actually turned out to be more visible and reliable almost than airline travel because of the fluctuation that happens.
High took alert plus 800.
Airlines are looking more volatility. Right, and it's not only that.
Okay, we've got less than 30 minutes to go. 23 minutes to go. 23 minutes to go into the closing bell. Mm-hmm.
Memorandum of agreement that they signed with Boeing. I mean, 60% of the revenue from Spirit Aerosystems is from Boeing. So when they had all these issues earlier this fall, Boeing stock slides, Spirit Aerosystems, that stock traded. It's slightly positive on the year, only about 2%. I think it's 3% positive year today. But if you look at some of the commentary out of Boeing, fixing problems that Spirit Aerosystems has, we start looking at China. They delivered their first 787 now. They're going to probably start delivering the 737. 20% of all new planes bought in 2042, Oliver, are going to be out of China. So what does that mean? It means free cash flow. It means a benefit for not only Boeing, but companies that provide ramping up production right now because Boeing's got a backlog of planes. So this is all positive for Spirit Aerosystems, as I mentioned, not positive on the year. Saw some call buyers in here too, far out of the money calls up the February cycle. So a couple months till expiration, fair bought over 4,000 of the 40 strike calls.
Beautiful, beautiful, beautiful. All right, look at this market. Oh my gosh. What a shakeout yesterday. I'm disappointed that we got shaken out of NVDA, Tesla, Meta yesterday. But that was for safety's sake. I mean, what happens if the markets had continued to move lower? Then we would have been a shit out of luck, right? SOL. Instead, we took the proper money management, risk management process, and we exited those positions. So if the markets bounce, we can buy again or sell credit spreads in this case. So you never want to be sitting in a position where you say, I know the market's going to move up. That is a death sentence most often. You never want to be telling yourself something like that where you think the markets are going to do something because we don't know what the market's going to do. We don't know what the market's going to do. It could be that your guess works, but that's not risk management to me. That's just hoping for the best. So we had to take those positions off and started them again on Tesla, NVIDIA, Meta. And now things are starting to move in the right way, in the right direction. S&P is just gone straight up now. Look at that. Beautiful.
Definitely. So, of course, the stocks were called by information. They were longer dated so about 120 days expiration. So pretty far out there. Bought over 2,500 of the April 140 strike calls for an average debit $2.70 to the break even. 142.
Look at this market. Bears got to be pissed. I know I would be. If I was bearish and I stuck with my guns and I just didn't heed the warnings. You know, look at the volume this morning. Captain Cautious told you this morning that up volume on the NYSE was 17-1. About 15 minutes later, it was 13-1, but still very high. And today, right now, it's at 6-1 up volume. So more than likely, it was a lot of shorts covering in the morning trade as well. But nice way to end the day, 6-1 up volume. I'll take that any day. All right, S&P coming back up to resistance.
Accelerate your market knowledge and shift your perspective into OG. Real-time example trades, 4 hours of trading. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab. Fast Market, ready for you.
By the way, if you want to trade solars, there's another way to trade this. NXT, I see them posting on NXT making all-time highs. NXT is Next Tracker. It tracks solar stocks, integrated solar tracker, and solar solutions. Okay. Looks good. Looks at weekly trend. All right, so we're consolidating at the highs. All right, this is a new IPO, NXT, following through. 13% is short. The 13% of the float is short. I can't speak. NX. All right. All right. 41. Okay, market's on the move. All right, we've got 14 minutes to go. 14 minutes to go. You can hear that bullish flow in the background, that clicking. That's Woody. We affectionately call him Woody. Woody Woodpecker. All right, S&P 500 is moving higher. It looks good. S&P. Okay, what is IWM doing? Haven't looked at IWM since early morning. Let's see, IWM. Okay, IWM looking a lot better. IWM looking a lot better. Inside day. This bearish candle yesterday, by the way, most of you know in the trading room that this was caused by zero-day options. Okay, so this could be an oddball. If you just remove this from your psyche, if you will, just erase this from your memory. You've got two bullish days. We're looking for a follow through. 921.50 or turned up and to the right. 50 days about to cross through the 200-day, probably by next week sometime. IWM looks like a new range for IWM. Okay, prior to this break of the top level here, we were trading an iron condor, looking for price to stay between. Now it's taken off to the upside. So we took the call side off a couple of weeks ago. We had the put side into the end of the week last week. We took that off for a profit. And you can see the volume coming in here. That's institutional volume. Look at the rate of change. Turning back up. Momentum is clearly bullish on IWM. Looking very strong. Okay, looking good. Looking real good. Mm-hmm. Okay, Mara, looking good. Mara. Okay, Mara, Mondo Cello posted in the room earlier. Mara, a couple of weeks ago, 3 weeks ago, I guess, Mara was pushing through the 1211 area, I believe. Mondo, you were talking about this breakout above 1070, something like that. Okay, so you were looking for this break higher. Okay, look at this volume. Look at that volume. Looks good. All right, this volume looks really good on Mara on the breakout. RSI above 70, strength of trend. Whoops. Sorry about that. Strength of trend. Persistent. RSI. Looks good. That's a nice call there, Mondo. Okay, so I'm doing this a little differently than you guys. I'm doing a credit spread. I think this is what I was doing here, right? Credit spread. This was just an example from earlier. This is much higher now. Mara is almost about ready to break out above 25. Mara is about to break above 25, going into the closing bell. Okay. Here is Mara now closing in on 25 very quickly. So you can see how this credit spread will work as that number at the bottom of the screen starts to move across to the right. This credit spread is making more on this move higher. Consistent income. You don't have to go big. You don't have to go 5, 10 of these. Just do 2 or 3 of them, to supplement the rest of your trading. Biggest problem people make on credit spreads, number one, is they take a stock that doesn't have high enough volatility. And 2, they take a stock that has a delta that's too high, leading to the possibility that you'll have to close the position or take a loss. All right. So try to use a delta under 20. Between 17 and 20 is a sweet spot for me. And look for that dip to buy, or look for the dip to sell credit spreads, not the high of the day, because invariably the stock's going to pull back on you. Okay, so that's that. Let's go to S&P. It's taken off to the upside. S&P. There's your resistance level coming into view, 47.50, with 7 minutes to go for the closing bell. 7 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, here with you every day between 9:15 and 4 p.m., giving you the play-by-play. Some days are better than others. Today was kind of slow. We had a flat VWAP, as you can see. That dark purple line is a flat VWAP. So we want to trade stocks that have VWAP up and to the right. Okay. Meta, you can see that VWAP is starting to turn, but still kind of flat. Tesla's VWAP is starting to turn. Okay. You can see Tesla's VWAP starting to turn up and to the right. That's a bullish sign. We went through the highs of the day right here. Stochastic RSI turning, volume picking up, looking pretty good. 6 minutes to go. 6 minutes to go. Okay. NVIDIA shook us out of a position yesterday. When I'm selling credit spreads, I don't really like to call it shaking out, but it did look like NVIDIA was going to continue to move lower. So it's risk management 101. You want to take a position off before it gets to a point in this chart. I'll show you Mara, for example. All right, so the credit spread, you see that diagonal line over there on the left? Drops off to the left. They have a vertical there. It's called MG, max gain. Okay, you don't want to go to the left. You don't want to go past that green line. Once you start going towards that green line, then you start to lose money. Over here at the top of this flat line, the purple flat line, all along there, you're making money. Okay, so you just got to time your entry, make sure that you're buying on dips like down here at the low, selling your credit spreads at the low, and let price action move away from you. So it's all about timing and risk management. Yesterday, we got out of NVIDIA, Meta, and Tesla because it looked like the markets were going to fade after 9 days up. Yesterday was day 10. Looked like we were going to see a fade, and we finally got it in spades. We sold off, and we closed at the low of the day. So proper risk management told us to get out. We actually still had a credit left. It's just less of a credit once we close the position. So S&P is still going here. Looks good. I know what you want. You want treats, right? You guys are too much with the treats. Come here. Cats are hungry. Okay. All right. So looking pretty good. Mara's still climbing. Okay. Looks good. CF Industries. Don't forget about CF Industries. That one's going too. CF Industries. That showed up on our radar early this morning. CF Industries. Okay, VWAP starting to turn up end of day. VWAP starting to turn up. Volumes picking up towards the last 4 or 5 minutes of the trading day. Okay, CF Industry is a fertilizer company. CF. Okay, you can see it's breaking through the 50-day today. CF breaking through the 50-day. Volume is picking up. MACD stochastics rising. And RSI above 50. So it's telling you this trend is turning. Let's look at the Bollinger Bands. Look at that lower Bollinger Band. What does that tell you? That lower Bollinger Band is telling you look for a fast move. What direction? Bollinger Bands don't tell you what direction, but if you watch RSI, that usually tells you the right direction to take. We took out the highs right here. Count back 4 candles. When you take out the high, that's a trigger in some strategies. When you take out the wicks of those 4 right there, 4 candles back, those 2 wicks right there at 78.70, 78.80. That's your long setup, RSI rising. Now all you have to do is get your proper entry with an ABCD pattern. Here's A over here. Okay, if you don't know what I'm talking about, ABCD pattern looks like this. Okay, here's your ABCD pattern. What happens at A? People take lunch. People on the West Coast that get up at 6 o'clock in the morning to trade the markets at 6:30 their time, 9:30 our time, they take profits and they go to work. Some people on the East Coast go to lunch and they sell their position. It moves lower. It finally makes a bounce. We see that B pivot. At the B pivot, that's where we put our stop. We're looking to get long once it gets back above VWAP. Put our stop underneath this level right here, 78.79. You look for that C pivot. Now we're starting to head towards D. So that's an ABCD pattern. Happens every day, most of the time on most stocks. Okay. So NVIDIA, watching NVIDIA going into the close. We got 2 minutes to go. Okay. NVIDIA just flat VWAP and starting to turn higher now. So running the shorts out of town. Looking really good. Okay. So we're about to wrap it up for today. Folks, I hope you had a good day. I hope you'll be back tomorrow. If you're not, if you go on taking an early leave, enjoy your Christmas holiday if you celebrate. And we'll see you next week. Okay, so let's take a look at, all right, I just saw something on the screen that made me kind of giggle. Look at the market carpet now. Okay, that's a nice Christmas right there. All right, looking good. Looking good going into close. There we go. Looking good.
Young lady who was in 30s, couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother being a single mom. At the end of the day,
Okay, so that's the close.
including myself. And so once the client knew that she was hurt, clearly there was emotional support. Your client won't care how much you know until they know how much you care.
Beautiful. All right, folks. Have a great evening, everyone. We'll see you in the morning, bright and early. Take care. See you then. Ciao.